Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, welcome back everybody. Hope you're doing well. Good morning, good afternoon to the regulars in the chat here today. Got 145 people watching. Appreciate you being here. Okay, so pretty big news item on today's to-do. We have some PCE numbers. Now, why does this matter? Well, PCE numbers are the Fed's quote-unquote preferred measurement of inflation. Personal consumption expenditure. What this tells you is it gives you a bit of an idea, very strictly to the real world impact of the consumer, how prices are changing for them. And this matters a lot to the Fed because the Fed, at the end of the day, has 2 mandates. They want to keep jobs and inflation in relatively healthy spots. Okay. It's easier said than done. Everybody loves to criticize the Fed, but they have a really hard job if you think about it, right? Trying to keep an economy on the rails where just massive government spending is going on and they're trying to levy that storm. And they got a tough job out there. I certainly don't want that job. But their goal is to keep jobs at a maximum and inflation at a 2% rate. You might be saying, well, Nick, why wouldn't they want inflation to be 0? Right? Inflation's awful, right? Well, inflation is, it's one of those things. You don't want inflation too hot and you don't want inflation too cold. Inflation, you might say, well, inflation too cold sounds great. I would love if prices stopped going up. That's true. But inflation is a sort of a necessary evil in a way, at least in according to traditional economic expertise. The thought process is you want prices to rise over time. Why? Because prices rising means a lot of good things. It means, okay, there's demand for products. Consumers are able to afford things, so they're bidding prices up. But you don't want prices to be bid up rapidly. That's the problem. That's what people, when they think inflation, they think of this. They're like, prices going up dramatically. That's painful. Prices going up really slowly over time to the point that you don't really feel it. That's okay. We're fine with that because that's a byproduct of a healthy economy. Prices should go up slightly over time, right? That's the theory. Now, why wouldn't you want prices to go down dramatically or just stay flat or even go down? Like, isn't that a good thing? Well, maybe in the short run, it would feel nice, but it would probably come at the cost of your job. That's the downside, right? Because typically when we see prices declining dramatically, that's evidence that the consumer is not strong at all. They're not bidding prices at all. And we're entering into a recession, in which case most people lose their jobs, or not most people, but a lot of people lose their jobs. And there's really pain out there. We don't want prices to go down. As much as it may sound nice, what comes with it is terrible, right? It's kind of like if you well, this is a bad kind of borderline example, but let's just say you got really, really sick, right? And you lost a lot of weight. That's not the type of weight loss you really want, right? Because you might pass away. We don't want that, right? So that's what I'm talking about. With inflation getting really, really down, you don't actually want that. You want inflation at a healthy level, right? We want healthy weight loss. We don't want healthy or unhealthy weight loss, right? Anyways, that's what I want. Anyways, with the PCE number coming out in just a few minutes, we have about 10 minutes to go. Let's talk about some ideas. Let's talk about what's going on here. And we got to shout it out. Gold ripping to new highs, baby. Here we go again. I mean, it is a crazy, crazy time to be watching gold. We've had some really impressive runs here. And I cannot imagine, you know, it's hard for me not to comment on this, but over time, there's been a lot of people who are just like obnoxiously bearish on gold or obnoxiously bearish on stocks. And to me, it's just like, what's the rub here? What's your deal with hating on gold so much? Gold goes up over time. Not every day, not every week, not every month, not even every year. Gold can go down for 3 years. But over the long term, gold goes higher. So I really don't know, the logic behind a lot of people who have been just incredibly short gold. From a fundamentals perspective, I don't get it. From a technicals perspective, I don't get it. And yet, crowd sentiment is still super bearish on gold. Crowd sentiment bearish on gold. Okay? This is why we look at data, guys. This is why you don't ignore this stuff, because when we look at the put to call ratio, which, by the way, look at the shiny new look on the put to call ratio. The put to call ratio is showing that gold contracts, oh man, I know there's some gold traders right there. They're salivating. Their eyes are glittery right now. They're like, Nick, no way you just said this. No way you just said the put to call ratio now includes gold. Heck yeah, it does. We're A1 trading, man. I'm wearing the shirt today. I'm wearing the shirt. We mean business. We build cool tools for traders, and we know our gold traders want the put to call ratio. We know you want it. We know it. We know you can't stand not having the put to call ratio for gold. I'm talking to you. You on the other side of that camera, you wanted this because we kept hearing it from people. People were like, Nick, put to call ratio gold. This is a cool idea. And I was like, okay, cool. We built it. The gold's put to call ratio shows you on an options contract ratio how many puts, how many calls are they trading on gold. Check this out. When everybody gets bearish on gold, people are buying puts on gold right now. Fascinating. They've been buying puts. This is the deal, right? This is the situation, is they keep buying puts. They keep betting against gold. And what does gold do? It keeps ripping. Okay. I'm going to buy the EdgeFinder again because we're getting too much value. Aaron, you're the man. You don't have to do that. That's the point, man. That's the point of being an EdgeFinder user. You pay once and you get all of our upgrades for free. We appreciate your support. You do not have to buy it again. You pay once, you get all of our tools. That's our promise. And we keep doing it. We hit it. We love that. That is like, I get a super high feeling when people are like, I bought the EdgeFinder 2 years ago and this thing's become a monster and I haven't paid an extra dime. And I'm like, yes, sir. That's how it goes. But yeah, if you have the EdgeFinder, check this out. I mean, that gradient looks sleek. We added a gradient to this to make it easier to read. Put to call ratio for gold, silver, Russell, Nikkei, NASDAQ, Dow, DAX, China, US oil, FTSE. Again, young trader Nick would be really proud to be like, dang, you built all those tools. You and the team built all those tools. Nah, man, me and the community built these tools. The tools were built. They were inspired by the community and built by my team. That's the cool thing, right? That's what really gets me up in the morning is I'm like, we have people leaving so much feedback on the EdgeFinder. They're like, do this, do that, try this, try that. And when we start hearing the same thing over and over, then we bring it to market and then we just get a flood of emails. We're so happy you built this. Man, that's why I wake up at 5 a.m. every day because I love this stuff. Anyways, I'm on a rant. We got PCE coming out in a few days. If you don't have the EdgeFinder, let me just put you on to some free game. Literally, it's free for the next few days. The EdgeFinder is free this weekend to use. You're running out of time though. We gave a full free week starting on Monday to everyone who wanted to try the EdgeFinder. The EdgeFinder is no longer going to be free starting on Sunday. So if you don't, or actually, I think we'll probably shut it down Monday morning. The EdgeFinder is free to use right now. Here's how you can get it. I just want to make sure I plug this before I forget. Head to our Telegram channel. We're going to drop the link to the chat right now, or to the Telegram right now in the YouTube chat. Take a second, go subscribe to our Telegram channel. And once you're in there, click the link right here. Free EdgeFinder access this week only. That is ending. That is ending. Okay. Economic heat maps. We got a little bit of everything. I'm so pumped about it because this week we've had more people than ever using the EdgeFinder, which is a cool experience. So take advantage. Free week is ending. Play around with our tools, our data. Try it for yourself. See if it's right for you. And buy it on Monday if you love it. So there you go. Anyways, let's see. We've got just a few minutes to go, guys. We've got 4 minutes until we get the personal consumption expenditures data. We're taking a look specifically at the core PCE data today. Really want to see how we come in on that. 2.7% expected. Previously, we were at 2.6%. What do we want to see here? Well, if you're a dollar bull, you want to see this at 2.8, 2.9. If you're a dollar bear, you want it at 2.7 or less. If you're a stock bull, right, you want this thing to be low. If you're a gold bull, you want this thing to be low, right? Cooling inflation means the Fed will cut rates more likely. Look at this, guys. Metals ripping here ahead of PCE. The silver trade, I did end up trailing a stop on this one, guys. My stop loss yesterday was moved from this. So I have no risk on the trade anymore. If this thing reverses, I'll still make a profit. I may be giving back some, but I want to be patient with this silver move, as I do think that there is more room for this thing to run. Again, when silver really makes moves, you get stuff like this. And I think that's possible. So I want to try and stay around for the move, but I want price action to tell me when it's time to get out of the trade. So I am long silver going into PCE with a stop loss trailed. If we get cool inflation numbers, gold and silver can continue to run hot, in my view. Stocks really are sitting at a key level of support. If you get a hot a hot PCE print here this morning, it's possible that the SP500 may head back and test those lows, right? But if you get a cool inflationary print, this would be fuel for the fire that has been the recent bounce back in stocks. So let's see. We're really close here to the data point coming out. I'm going to go ahead and switch over to our all markets view. Let's switch this. So on your screen right now, what you can see is we have S&P 500, NASDAQ, Dow Jones, Russell, the dollar index, gold, Bitcoin, and oil all on your screen so that you can watch the reaction with me to everything. Don't go anywhere after the spike. We oftentimes have people leave right after the news comes out, but that's where the fun starts. We'll be taking a look at what the PCE number actually tells us about the markets and if there are some possible trade ideas that we could take or look for based on the data. We've got about 30 seconds to go here before the data point comes out. I did mention that, again, like I said, make sure to take advantage of the free week that is ending on Monday. Make sure to join our Telegram channel. We've had thousands of people check out the EdgeFinder. It's been a really fun week for me and the team. And next week, just a little bit of a heads up, we're going to be announcing some pretty big discounts if you enjoyed the EdgeFinder. So secrets, stay tuned. It's coming soon. Okay, guys, coming in, breaking news. Let's see what we've got here in terms of core PCE numbers. So far, dollar mixed here, stock slightly lower. All right. We got 2.8%, so slightly higher than expected here, guys. 2.6% was revised to 2.7, 2.8%. So a bit of a hot inflation print here this morning. You can see there goes stocks to the downside. You've got dollar index slightly higher. And at the same time, gold also making not too much of a move, actually. That's kind of an impressive hold there if you think about it. Let's take a look at metals. Sorry, I might turn my phone sound off. Okay, so let's go take a look at and see what's happening. So S&P 500, NASDAQ a little bit lower off of this data point. Not a huge move. They were actually down lower earlier in the morning in the session. Dollar index slightly higher here off of this data point. The gold market, again, unbothered, it seems, even by a slightly higher than expected inflation print, at least at this time. Take a look at your 15-minute chart. Look at that. Barely a move. It's got to be one of the most frustrating things to be a bear on gold right now, because it's like nothing gets this thing to move lower. That is the strength. That is momentum, right? The overall fundamental story still looks super bullish for gold, even if you get a slight uptick in inflation. That's clearly at this time not enough to get gold to crack. Gold is just a beast. It's just going up and up and up. Same thing with silver, barely moved off that data point. Really impressive stuff here. Bitcoin's a little bit lower. Ethereum's down almost 6%. Copper modestly higher here today. Oil mixed. Take a look at some currencies. Euro is slightly lower. Still in my euro trade. Hasn't gone anywhere since I've gotten into it, really. Pound dollar, dollar yen. Let's take a look at pound. Pound, I do like to the upside. Would like a pullback if we can get a little bit lower prices there. Dollar yen. Pretty mixed on dollar yen at this time. Dollar Swiss, dollar CAD. Nothing too interesting here for me. Yen pairs moving a little bit lower here today. S&P 500. Let's take a look at the 15-minute chart just to see the reaction here. You can see we did get a little bit of a blip lower, showing some stark buyback, though, on S&P 500. We'll have to see what happens with the indices. They're at pretty pivotal times. Take a look with me at the S&P 500, and what you can see here is that we've been putting in these higher lows on this chart, right? The question now becomes, with NASDAQ, with S&P 500, pullback for last few days, filled the gap. And what I would caution the bears on, okay, is this was almost perfect, right? You gapped open, the market leapt off that gap. It jumped for a little bit, came all the way back, filled the gap. And now that PCE is behind us, the worries about PCE behind us could lead to, okay, we're good. All clear, continue. Nick isn't scared of news spikes. What is there to be scared of with news spikes if you are properly leveraged? Ask yourself that question. If news spikes make you really nervous, that's telling you that you know internally your position sizing is inappropriate. If news spikes get you so excited, so scared, so enthusiastic, excited or depressed, your position sizing is too big. That's not trading, that's gambling. Your body tells you, your body, right? Your mind tells you, oh, yeah, I'm being an idiot, right? Because it might work here and there. You might be on the right side of a big move and it feels amazing. But in the long term, the market always comes back for you. If you're trying to cheat the market, if you're trying to go big, trying to make quick money, the market will come back and take more than you thought it could. That is the challenge of trading, right? A lot of people think they're smart. They think they're quick, and then the market proves them wrong. That's the challenge, right? At the end of the day, position sizing is really, really important, because even if you have an idea, like I have ideas all the time that go wrong, right? Oh, I think this is going to happen. It makes sense. Educated guess. All these things line up, and then it doesn't work, right? Why? Well, because nothing is perfect in markets. They're unpredictable at times. Who is to possibly know when some groundbreaking news out of the Middle East or something like that is going to come out and change the story? Am I doing anything with the silver trade? No. Not closing, just managing. So what I mean by that is I had a trade entry here. I believe the EdgeFinder has a bullish reading on silver. Let me just check. It did. Nope, it's neutral now. So I'm just managing from here. Actually, that's a question that I regularly get with the EdgeFinder is people say, okay, so you have a trade on in silver. It was bullish on the EdgeFinder. When I took this trade, I believe it was a +6 on the EdgeFinder. So it was bullish. I took the trade and now, Nick, it's neutral. It's only a +2. So does that mean you close the trade? And the answer is no, that's not how I use it. Now, you might use the EdgeFinder differently. We have traders all over the world who use the EdgeFinder differently than I do. The EdgeFinder is not a trading strategy. The EdgeFinder is a scanning tool that helps optimize looking at lots of data to make better informed decisions on your trading, right? It's a powerful tool, but it's not a, oh, buy now, sell now tool. That's not really how it's used. And the people who have the most success with the EdgeFinder are not trying to use it that way. They're trying to use it in a way to add confluence to what they're doing. So most of us could mark this chart up and say, hey, this is a pretty clear level of support. 50% retracement looks great for a possible buy. The EdgeFinder's confirmation gave me the extra, okay, I can go for this trade. So I entered the trade. Now from here, I like to manage my trades by trailing a stop loss. So what I use is I use market structure to trail my stops. So what we have at this time is a key breakout above this structure high. So we had a nice break above this $34 per ounce level on the price of silver. Beautiful close yesterday. You could not ask for a better up green day to give me the signal to now take this initial stop loss and move that guy into profit. Now, where did I move this into profit? If I was aggressive with this, I guess I could have put it right here, but I liked the idea of just giving it this little swing low, this 1 day break that silver took right before pushing up. This really is another key area of support. I could mark this as well, and I have it marked on the 4-hour chart. Take a look at the 4-hour chart with me. You can see that is deliberately where I put my stop loss. Now on the daily chart, we have a key level of support here. So what I like about this trade, I like the way that I've managed this, is twofold. One, we have a really key level of daily support that if price comes down and tests, okay, great, that's fine. I don't mind that coming and testing that area, but I'd like to see a response from that area continuing the uptrend. On the 4-hour chart, we also have a really key level of consolidation that ultimately broke higher. This was the breakout point right here, right? So if price comes down and retests this consolidation, I'm also comfortable holding through that period if it leads to a continuation. But if we come down to this area and fail at support, that will be my trigger to just take a loss. Not a loss. Take a profit on the position because this trailing stop is moved into profit. I can't lose money on the trade. It's just a question of whether or not this trade can continue to new fresh highs and push on to next levels, right? S&P 500, again, kind of towards the lows of the session now. What we can see here is looking at the hourly chart. We're pretty close to this 56.72 level. This is the low of the day. We'll have to keep an eye to see how that is working out. NASDAQ, same story, kind of breaking down here. Tried to continue higher, but seems like it's struggling. We'll see how the daily chart closes this week. I mean, today is Friday after all. So we'll see if we're going into the weekend with a sell-off. If so, probably need to get out of the way of some of the positions that I'm in. And if we can bounce, then I'll try and stay long. Let's take a look at the dollar index. Dollar index pretty flat here on the news. VIX is up 4% today, so a little bit of a spike back. Gold is up beautifully today. Look at this. Gold price is ripping here. Actually taking out yet again another all-time high. We're sitting just shy of all-time highs yet again. And looks like we're headed straight to that 3,100 mark. Congratulations again to fellow metals bulls. This has been a really awesome time the last few years. We've just been ripping higher and higher. And again, we stay with the fundamental trend here. Gold, very bullish reading. Institutional money is long gold. We've talked about that quite a bit. In fact, let's take a look at institutional money while we are talking about it. This has been a theme, right? So if you're super short gold, I just want to encourage you to think about this. This is why we use data. This is why we look at the EdgeFinder. This is why we study this stuff. Institutional money has been super bullish on gold. So if you're like just all in bearish on gold, you're like, this thing is just making me so mad. It just keeps going up and up and up. What you have to understand is that big money has been trading the long side for months and months and months. There's been no reason to be bearish on gold if the big players are so bullish on it. At least that's my way of looking at this. We can see that on the weekly filing, the latest buys and sells, we had a huge net accumulation again for gold. Long contracts got dramatically increased. Short contracts slightly increased, but look at the weighting. They are massively long gold. Institutional money flow is super bullish gold. Okay. Now, again, I'm not telling you that out of speculation. If you don't like hearing the facts, and I understand, but if you're bearish on gold just because you don't like that it's gone so far, that's not a reason. That's just hoping and praying that gold's going to reverse. And I've been saying this for months on the channel. In fact, quite literally like 2 years. Gold has been just up and away. And we've been staying with that trend because institutional money shows not a big sign of getting out of the way. Let me show you that because we have the data for it. Again, if you don't have the data, you're just trading in the blind. This is why we look at it, right? It's 2025. Everything is data. Pay attention to it. Don't ignore it. Look at this. This is the COT history, okay? Historically, what do we see? Look at the blue versus the red. This is net long positions and short positions for gold. We've selected gold in the top right. If you're an EdgeFinder user and you don't trade gold, select whatever you want. You can look at the historical records on the commitment of traders data very easily within our tool. And what you can see is that we have seen you can go back months and months and months. They've been bullish going through 2023, 2024, 2025. Institutional money is winning on this trend. You know who's losing on this trend? Retail. Retail, shorting gold, betting against it, stopping out, blowing account after account after account. If that is you, I'm not picking on you. I'm not trying to make you feel bad. I'm not trying to press my thumb into a wound. I know that's how that feels. I'm not doing any of that. I'm not trying to make you feel bad. I'm trying to ask you to think about this logically. If institutional money is consistently accumulating longs and they're the ones that ultimately move the markets, what are we doing if we're just betting against a solid fundamental trend that institutional money has been parked in for some months and months and months? Who's retail? Retail is all of us. I'm a retail trader. You're a retail trader, unless you are, operating on a hedge fund desk. We're all retail traders. Most retail traders, unfortunately, lose money consistently. They lose money, they lose money, they lose money. Institutional money, these are the pros. What they're doing matters. What retail is doing on average, you want to be careful. You're not chasing the same ideas. Does that make sense? If that makes sense, do me a big favor. If that breakdown clicked with you, if you're like, okay, I get that, just drop a 1 or a yes in the chat for me, just so I know that made sense, that we just broke that down okay. Because again, COT data is important and people miss it. They say, oh no, that's lagging information. Is it really? Gold's uptrend has been observable for months. Months, I'm telling you, like years even. There's been no reason to get outright massively bearish for like 2 years on this channel. You can go back. I've not been bearish because most of our indications within the EdgeFinder have consistently been bullish. And you might say, well, Nick, gold seems like it's just always bullish on the EdgeFinder. Yeah, it is mostly bullish the last few years. I'm glad that it's been bullish the last few years. That's been the correct side of the trade for the last few years, right? Will it be bearish at some point? Of course it will. But you or I are not going to be the ones to be able to tell you with certainty where that's going to turn, right? Will it be bearish for a year? Yes. Will it have a down year? Absolutely. So will stocks, gold, stocks. These things will have down periods. Don't get me wrong. They're not forever going up. But if you think you're going to be the one to say, oh no, this is the time that it's topped, I can't tell you how many people have commented on my YouTube channel, and I know they're not even trading anymore. They blew like 6 accounts. They're gone. They're like, this is a scam. Study the big money. Study the crowd. Be smart. Don't be stupid. Okay. Thank you for the ones and yeses. That makes sense to me that we clarified that topic. I just want to give you, while I mention this, if you're like, okay, Nick, I get it. You're a salesman. These are cool tools. Fine. Let me check out your software for free until Sunday. You said that? Oh, why didn't you ask? EdgeFinder's free until Sunday. We're dropping it in our Telegram channel right now. Completely free to use until Monday. I'm saying Monday because I'm not sure when we're going to shut it down. It'll be a process. The EdgeFinder free version is available until at least Sunday evening. Okay? If you do not have a copy of the EdgeFinder, do not miss your chance to try it for free this weekend. Stop messing around. Stop losing money in the markets. Start paying attention to the data. It changed my life. And I'm telling you that. That's why I'm so passionate about this. Study the data. Focus on it. Risk manage. Study economic data. Study sentiment data. It changed my life. So again, that's why I'm so passionate about that. What are your thoughts on Sam KB? I love Sam. Him and I have done a couple podcasts together. He's a cool dude. Be smart. Don't be stupid. Let's see. Look, I'm not, and the thing is, like, you don't even have to be, it's not even being quote unquote smart. It's not being brilliant. It's just don't be stupid, right? Traders would massively, you don't have to be a 500 IQ person to be a profitable trader. In fact, a lot of smart people struggle with trading because they think they want to just like outthink everybody else. But a lot of times the best thing you can do in trading is just, okay, observe economic trends, observe what institutional money flow is doing, and trade intelligently in the same direction with good risk management. Trading, you don't have to be a hero to be a profitable trader. You just have to be rational, disciplined, patient, fix what's happening up here, and then study what's happening with the pros. Study what's happening in the economic data. Study what the big money is likely to do next. You know what the biggest money is? The biggest money is the Fed. This is what the Fed looks like or looks at. They look at economic data. So these are things that's why we focus so heavily on these things on my shows, on my channel. It's because economic data is what the Fed looks at. And COT data is a reflection of big money flows in and out of certain assets. Okay. Anyways, up next, guys, we've got joining with me Kenzo from Extra Hot Forex. He's going to be coming on to do our Fundamental Friday session. So stay tuned. We'll be right back with Kenzo just after this quick break. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, guys, and we are back with Kenzo. Hey, Kenzo, how you doing, man?
I'm doing great, thanks, and you?
I'm good. It's good to have you back on the show. Pretty much every Friday, Kenzo and I go over indices. We talk gold, we talk the dollar, a little bit of everything in retrospect to what is occurring, both fundamentally and technically in the markets. Kenzo, it's been an interesting week. We've had a couple weeks now of a bounce back in the S&P 500, the NASDAQ. They've been trying to crawl back from the major sell-off that we saw at the turn of the last few months. What are your thoughts here with PCE coming in a little bit higher than expected today? How's the data looking for you? How's is there a bullish trend starting here for S&P, for NASDAQ, or are you more cautious still?
Yeah, I think on the indices in general, I think we will have a reversal
Mhm.
And actually, we are on a reversal phase because we also had a support down there. So now the market is just trying to reverse a little bit, and we have a nice structure there. We can call that support. I think we might have a continuation of that bullish move. I think for now, the market did sell enough. So we no longer have that crazy room to say everything is overbought or inflated. So we can say, yeah, there is a room for a continuation of that bullish move. But I can say with the PCE number, it's not really that bad. It's positive. It's good. It makes the dollar to be a little bit stronger.
Mhm.
But I don't think maybe it's going to change anything.
Yep, we had 2.8% core PCE here this morning, a little higher than expected from the 2.7% number. And also the month over month came in a little bit hot as well. So for core, yeah, interesting numbers here this week. I mean, what we also had was a little bit better than expected GDP numbers. So there was some positive, there was some negative. Unemployment claims came in pretty okay. PCE here on Friday, not great, not an absolute disaster either. And again, I think that the big thing here continues to be, Kenzo, at the end of the day, it's all about the tariff concerns, right? We had similar inflation reads over here. It's just really the big difference since then has been the uncertainty around the tariff situation. With April 2nd, next week, I mean, we're counting down the days, just a few more days until we get the quote unquote liberation day or doomsday, depending on who you ask. What are your thoughts on that? I mean, we have with the retaliatory tariffs and all that. Do you think the market is overreacting or underreacting to what could be coming next week?
Yeah, I think already the market reacted to that. Once we reach next week, the market already moved. I think we will see a sort of reversal. I don't think we're gonna see a crazy panic. Plus, I think there is a smaller softening. They're no longer that aggressive. They said they will be lenient with other tariffs and stuff like that. But in the long run, if we check the market in the investor side, one
Mhm.
way or another, the market will still go up because those companies which are in these indices, one way or another, they will still invest, they will still continue to be productive. So, which means one way or another, now I think it's just because of the panic, but at the end of the day, we will see the market going up.
Yeah, I mean, that's the thing is the market, when it kind of figured out, okay, tariffs are what we're really going to focus on here for the next few weeks, it really
Mm,
sold aggressively, kind of did a sell now, ask questions later dynamic. Now what we see
mm,
is the market trying to climb back. And I've been saying on my channel that I do think that there is a good chance, not a certainty, never a certainty, that we may actually be bottoming out here, that we may actually be finding some higher lows coming into this market ahead of the big scary event that happens next week, that April 2nd liberation day, quote unquote, from the Trump administration. The idea being, again, that a lot of retaliatory tariffs will go into place. But we've seen some stuff between the kind of announcements of this stuff and the upcoming date. There's been some terminology used when reporters press Trump, more on the words of like flexible, right? Or that
mm,
they may be more sectoral tariffs, like more targeted, specific, like to the auto stuff that we saw this week. The market, in some ways, took that as a positive. It said, okay, so it's not just sweeping, dominating tariffs across every single part of the economy. Maybe it's going to be a
mm.
little bit more rolled out over time. And so we'll see if that can be the case. But I've been making the claim that I think that most likely the worst case scenario, which is the sweeping, devastating, quote unquote, terrifying, tariffs, I don't think that that is likely what's going to happen. I think there will be negotiation. I think there will be discussion. And most countries will probably come to the table with the US and we'll find a way to have some kind of peaceful trade war resolution at some point. Whether that be sooner or later, we'll see. But that's my opinion.
Mhm.
I feel like being optimistic in this case, rather than assuming the worst, which seems what the market is doing, I think will pay out in the end.
Yeah, I think that it's actually the case. Mostly, I can say mostly Trump used this aggressive tone
Hmm.
just to bring everyone on the table so that they can negotiate. So even now, I think they are still open for those discussions. It's just that other countries they don't really accept other things. But I don't think everything is gonna go on like that because in a short time, yes, it might hurt the market,
Hmm.
but there are other positives which actually will boost a US economy. So it's not like everything is bad. It's just that just because we follow breaking news, we just think everything is bad. But for now, I think let's just wait for next week. I don't think we're gonna get some bad news as we think. Yes, they might go on, but I think slowly they will be lenient on other sectors. But I don't think it's gonna be as crazy as Doomsday. So obviously, they also think I think there are smart people who are also watching this in a different way. We might be looking at Trump, yes, but there are people behind that. That's why they always postpone this, so they know that this is not gonna be good. This is gonna be good, but in the long run, I think it's just going to meet halfway. So I don't think they're gonna crash everything.
Yeah, and another thing we could talk about here, Kenzo, we know it's a popular topic on the channel, but also relevant to what you're pointing out and what we're discussing. All this concern about tariffs and uncertainty about trade and just everything that's going on. It seems like a nonstop winner in all this continues to be gold. Take a look at
Mm,
gold almost reaching that crazy $3,100 an ounce level. I mean, we've really, really seen gold do some impressive things here. What are your thoughts on gold? Do you think this is, if we're thinking, this is where I'm a little bit cautious on metals. I have a long position personally on silver right now. Kenzo, I'm just
mm,
trailing a stop loss. Part of the reason that I'm a little bit cautious, I mean, I'm long and bullish metals, but I'm cautious because again, if we do get resolutions, if we get negotiations that go well, I can't help
mm.
but think, well, that could actually cause gold to pull back sharply. What are your thoughts on gold?
Yes, actually, we can say we are overbought,
Hmm.
which shows us that weakness might be along the way because already the ceasefire between Russia and Ukraine seems to be closer. And at the moment, I think maybe the only thing that is pushing gold is the tariffs on metals, silver, platinum, and the other ones.
Hmm.
That just put the whole group of metals to go in that direction. But especially on gold, if we have softer, maybe resolution on the other side of Russia and Ukraine, I don't think we're gonna see that push going up for a very long time, and I think we're gonna see some serious reversals because the panic minus one problem will be out of the picture. So you'll just imagine those investors in those countries they will be trying to obviously diversify or buy other things or
Hmm.
stocks, and they will be offloading obviously from gold and even other countries, not only Russia and Ukraine. So at the moment we can say we are overbought, but there are like reasonable reasons why it's still going up. I can say yeah, we can still go higher until we reach a certain point where we can say okay, they settled their differences, then we are going to see some serious push, I mean move to the downside.
I think it's an important thing that you're saying because, Kenzo, we were discussing this just before you joined. The concept that we've seen a lot of bearishness from the average trader out there on gold. A lot of retail, and you know this well. You've done this a long time, as I have as well. Like this is a common theme. A lot of times when something like gold goes up, I get a flood of comments. Nick, when is gold going to go back down? I'm bearish on gold. I'm taking sells. Sell gold. Trust me, bro. I've gotten tons of comments like that on my channel here. The reason I bring it up is because what we're expressing is an interesting uh, thought process, similar but different. What I mean by that is you and I have just mentioned, like, okay, gold is looking a little stretched. We've had a huge, huge run up. It's probably due for a pullback. And there's some fundamental reasons why it could. I'm not saying right now, fundamentally, there's a lot of uncertainty, but if we get some resolutions, things could change very quickly and gold could reverse. But the important distinction that we're making is that we don't want to try and time exactly when that reversal is, because right now, by default, momentum is up, right? Momentum is just going higher, higher, higher. We don't want to try and say this is the point where that turns around, right?
Exactly.
Now, if there is something like you're pointing out, let's say we get Russia and Ukraine official, ceasefire, and it's a serious progression there, and we start to see this kind of price action, then maybe there's some opportunity to be more bearish on gold for those who are bearish out there. But the point that you and I are making is that, is this thing overbought? Probably. But does that mean we sell right now? No. Right? We don't sell markets that are runaway uptrend markets. That's a newbie mistake that we see again in the data. We can see traders betting heavily against this move. Another cool indicator I want to show you is the put to call ratio for gold. We actually added this to the EdgeFinder. It shows options contracts on the gold market. So what we can see here is that people on gold are very bearish, right? High put demand showing a huge ratio, people buying puts on the price of gold. And so when the kind of crowd is betting that the market will go down, we've seen this for years, Kenzo. Typically, that means, not always, not every time, it's not a guarantee, but typically we want to fade that idea. We don't want to go with the crowd, right? So that's my take. Would you add anything to that concept of, even if you're cautious or think that it's topping out, trying to short this is a really hard trade, isn't it?
Yes, we can say technically, or with the technical analysis, we are on an overbought structure. I think that it's quite obvious. But with the real issues or real problem of fundamental side, we can say there is still a room for the market to go up to that point where we can say they reached the, let's say, those tensions or geopolitics, they cool off. Then it's where we are going to see maybe some cool off from gold. But at the moment, the only thing that is pushing gold is the tensions. If those tensions are cooling off, most likely because the backbone actually of gold as a safe haven, people still treat gold as a safe haven. So obviously that is the only, at the moment, only asset that you can buy if maybe you feel like the economy is stressed. So once that stress goes off, you start to look at other things like bonds and the other ones. But at the moment, I think along the way, or we can say in a short period of time, maybe we will have that reversal.
Yeah. Well, Kenzo, I also wanted to just kind of show, for example, how hard this trade actually has been. I want to use some simple moving averages and some just stuff that everybody knows and loves. Let's take a look at, let me just do this. Let's say we put our 200-day moving average, right? We've been in this dominant uptrend. So market's been in a massive upward trend. And what you can see here is the traditional RSI has actually been a really good timing indicator to get long when it reaches overbought. And this is the point that Kenzo and I are trying to make to everyone who's listening. People make the same mistake. This is why we rant about it over and over. People make the same mistake in markets for years and years and years. Kenzo, you and I have been doing this for years, streaming content. We see the same mistakes being made over and over. This was an overbought reading. It was a great time to buy gold. This was an overbought reading. It was a great time to buy gold. Overbought, good time to buy gold. Overbought, time to buy gold, right? What's interesting here, nothing works, and there are times where the RSI does not do this, where it's actually a great time to sell. But the point that I'm trying to make is that when the fundamentals are bullish, no amount of, this is overbought, is going to hold back the storm that is a fundamental upward trend. Look at the last, again, this is the painful reality of just looking at a purely technical chart. I mean, for the last few years, there's not one single example on this RSI
Mm.
that is not a bullish signal when it got to overbought. Isn't that crazy?
Yeah, you're right. You know, the only issue that I have with the technical is most of the rules are fixed. So it's like if maybe we overbought, it means the market has to go down. And that's the problem because you can see that the market has been breaking that for quite for a while now. So with
Mhm.
the fundamental is we look at the current situation. So when we say it's buying, there are reasons why we say it's buying.
Mm.
But with the RSI there, you can't actually explain why did we miss like more than a year or two. It's been saying we overbought, but still the market goes up. Why? Because it doesn't really look on the background what's really happening. So fundamental side actually puts what's really happening there and focuses on that. And mostly those are human emotions or investors' emotions. They know that, oh, now maybe Russia can recover 1, 2, 3, then they will invest looking at that, not specifically on the technical analysis.
Exactly. Exactly. And again, I think that we talk about fundamental analysis so frequently every Friday together because we know how important it really is to the bigger picture of this market. I mean, at the end of the day, that is what drives the markets. I'm not saying, and I want to make
Mm,
sure that sometimes I know I come across a little bit as a fundamental analysis elitist, and I know that I come across saying, that's the only, it's the best way. I do think it's important to consciously know something about, even if you're not necessarily a super fundamental trader. And
mm,
technicals are powerful stuff too. They can really be powerful as well. I'm just trying to make the point that you have to be careful that you don't, overemphasize technical analysis, which is kind of what everyone does, right? The retail trader on average focuses very heavily on technicals, and the average hedge fund manager focuses on fundamentals, right? So that difference is something we should pay attention to.
yes, but I don't think it's complete. If maybe we go back, when let's say the start of the trading, let's say when people start to trade with salt, gold, whatever,
Mhm.
mostly they were not looking at technicals. They were just looking at
That's
the
true.
situation. So if the other place is doing great, most likely for you to get products from that area, they will
Mhm.
be expensive. So they were looking at the real situations.
Yes.
Yes, technical analysis just came now, but if you check it now, people they still most 90% of the people they still follow fundamentals, even though technical it has to be there just to get the lows, maybe the highs, but it doesn't really determine that okay, the market is forced to go in that direction.
Yeah.
So value actually still we have to actually we focus on value. So it means if you start to focus on value, most likely the chart might be useless because if we think maybe this company is gonna sell this cars, sell this amount of things, it means we buying because we think something like this is gonna happen.
Mm.
So which means that creates a different story, no longer about technical. So
You know,
we
it's
buy based on the actual stuff.
You made such a powerful point there, Kenzo, because I've talked a little bit about that too. Think about this, right?
Mm,
Technical analysis is something that only traders use. Only traders
mm,
look at technical analysis. Fundamental analysis, whether everybody in this room knows it or not, everybody uses fundamental analysis. Every single human on planet Earth uses fundamental
mm,
analysis because of what you just said. If the
mm,
euro dollar exchange rate, I'll tell you this, I live in the US, right? A lot of US people like to take trips to Europe. We in the US, and I know this is relevant to everybody because when you think about traveling, you think about places that are more or less expensive. If the euro
yes.
is very high, it is more expensive to travel to Europe. So maybe we'll go
Mm,
somewhere else. If the European currency is more cheap, more affordable, I went to Greece this past year for my sister's wedding, and I looked at
mm,
the euro exchange rate, and it was a reasonably good price to go to Europe at the time. So when the euro is low and the euro is high, it makes a difference to consumer behavior, exactly as you're pointing out, right? So when people are thinking about, is this more expensive here? So everyone, when you go to the gas price, right? This morning I took a picture on my phone of what I spent at the gas pump. That's fundamental
Mm.
analysis in the real world. Fundamentals
Exactly.
are the real world.
Exactly. No, you are 100% on that. So mostly we just add technical just to understand what's really happening, but fundamentally or actually basically we still depend on the actual or the real information behind the scene. Whether the market is going up, like now, the dollar tried to gain some momentum here and there
Mhm.
because we saw a PCE gain some momentum. So it means uh, there are people who are buying stuff and stuff like that. So which means PCE or CPI, once it goes up, we understand why. If the
Mm.
numbers are going up, we understand why. If NFP goes down, we understand why. And immediately the currency will react to that.
Yes.
Whether there is a technical analysis or chart, but you will understand why that acts like that. Sometimes, yes, it might act funny because sometimes the market focuses on stuff that will happen tomorrow or next week, or like now we're focusing on tariffs. Sometimes we confuse the two. Sometimes we might see the release today and it doesn't really move the way we want, and we start to say, why doesn't it move? Sometimes there are bigger events, some are small, some we don't really care. So if maybe something is negative today or positive, and the market doesn't react to that, it doesn't really mean that fundamental is not really working. It might
Mhm.
be maybe there is a bigger elephant in the room, which we're still waiting for, like next week. So, but most likely, fundamental, it's number one.
Yeah, exactly. The market's always kind of thinking ahead too. That's a good point that you make. It's paying attention to what's the Fed meeting going to mean? What are people going to, are we going to see an interest rate cut next month or things like
Mm.
that? And today's inflation report, for example, came in a little bit hotter than expected. That should, in theory, push back interest rate cuts, but it's not doing so because why? Well, because again, as you mentioned, the market is kind of paying more attention to tariffs. It's paying more attention to the drama with what's happening with Trump in the White House. That's what has the market's focus right now. And as you have discussed, that changes over time. So one day it's tariffs, one day it's COVID, one day it's Fed interest rate hikes. The market's kind of always grappling with something and worried about something. It's kind of a fascinating thing. The market's always got something in focus.
Exactly, exactly.
Yeah.
So
Well, Kenzo, I also have another question for you, which is, okay, I know we love to trade the indices, NASDAQ, S&P, Dow Jones. Which one, if you were to see some technical breakouts to the upside, let's say we get some strength occurring on the S&P 500, the NASDAQ, and the Dow, which one do you like the best right now? Do you have one that I know in the last time I spoke with you, you liked the NASDAQ. Do you still feel the same way? Do you think the NASDAQ is set to outperform? And do you think something else could do a little better this year?
yeah, I think for actually for some clear moves, I will end up going with something like US 30. Yes, I will
Okay.
still go with Nasdaq, but US 30 to me, I think it doesn't really have this burden of AI and other stuff.
Mm.
Unfortunately, the tariffs, yes, they can weigh US 30 a little bit down, but I think every day we hear about AI, China this, China that. Sometimes the market reacts to that, especially now on Nvidia. We saw it was selling aggressively. So I think US 30 can perform very nice. We don't really have much companies which deal with AI. We don't really focus on AI. Unfortunately, they did add Nvidia,
Hmm.
but majority of them they don't focus on that. So I think US 30 can be something that I can watch. Nasdaq seems to be going to be crazy, especially once we're done with the tariff stuff. We're going to go back on the AI thing, so we're gonna have some issues going further.
Let me ask you this, Kenzo, because based on what you just said, it sounds like you're a little bit more cautious with the AI trade and more interested in taking a bit of a broad, maybe less exposed viewpoint on AI. And for everybody who's listening, when you trade indices, you have a choice, right? You can trade the Dow Jones, which is much more focused on kind of your core companies, right? Industrial
Mm,
companies, your Apples, your Walmarts, Costco's, things like that, things like your staple overall companies. NASDAQ is pretty tech focused, and S&P 500 is just very balanced across the board. So
Mm.
it sounds it's interesting to me. So you're saying, maybe be careful with the NASDAQ because of the AI story exposure, and maybe opt for the Dow, which is a little bit more defensive, more holds up a little bit better if we see some rough times.
Yes, mostly just because I don't really mind trading different things,
Mm.
I will just change the focus. So for now, I can see that Nasdaq is a bit struggling, and most likely, majority of the companies, let's say top seven, everyone, if maybe we can say what is the new product on those seven companies.
Mm-hmm.
So mostly the best products currently, we are going to talk about AI. It's ChatGPT with Microsoft or Copilot. It's
Yep.
Apple's trying to come up with Apple Intelligent and stuff like that. Mostly it's focused on one thing. And if one thing doesn't really go right, what will happen? So obviously something will actually not perform very well. But on US 30, I feel like they are a little bit balanced, even though we have Apple, Nvidia, and the other ones. There's banks and stuff like that. I think they might move very nice, but still, I'm not gonna abandon a Nasdaq. I will still just go a little bit slower, but also on the metals, I think now it's time to have a different focus. Gold, platinum, and silver, they are actually moving very nice.
Yeah, and just a quick thought because you mentioned it. Apple, interestingly, I was driving into work today, and I was so frustrated. I thought about this. I was listening to a podcast, and I had some notes that I wanted to write down, but obviously I was driving, and I thought to
Mm.
myself, let me see what Siri can do. So I did my Bluetooth, right? I did my Bluetooth. I said, "Hey Siri, can you write some notes for me?" And it was like, it
Yeah.
responded and said, "I'm sorry, I can't do that." And I was like, Apple, you're the
Mm,
second biggest or first biggest company in the whole world, and you are dropping the ball
mm,
hard on AI. You are losing the race. What is going on? Apple, is a company that, think about this, Kenzo. How amazing Siri could be. Hey, uh,
mm,
take some notes for me, and if it used AI properly, it could write down some notes, and then you could say, "Hey, Siri, can you pull up Yelp reviews for this, and then set an appointment so that I can go to this restaurant tonight." It is
mm.
it is really, they actually moved some of the leadership around recently within Apple. I believe on the
Yeah.
Siri stuff, they moved some leadership around because whoever was leading the project, I guess there's some good drama there. They weren't loving the results, they weren't loving the leadership there, and they've moved a new person into the role. It's like
Mm,
so crazy to me because I'm like, that is one of the biggest companies in the world. Apple needs to get their stuff together. It has so much potential to be the best AI product in the world. The tools that
mm.
Apple has are incredible. Where's the AI to string it all together like all these other places have?
So I think on that, it's a bit funny, but actually, Apple used to take time to advance. They can actually catch up very quick because they're too big. So they're too big to
Yeah.
fail. So actually, they will wait 2 years, 3 years for AI thing to catch up. Then they will come with a better product. And I think they are actually doing that. I think I heard they actually trying to link Siri with OpenAI, sorry, Chat GPT. So maybe it will come along the way. But at the moment, yes, it's not really performing very well. And I think I know the strategy that they actually take time to catch up, just to perfect. I think on AI, actually, they missed the point there. So they were supposed to catch up as soon as possible.
Well, the thing is, too, Kenzo, I will add to Apple. And my frustration is because I love the products. I use them all the time. Several people in my office use them. I have, Apple Watch. I've got the phone. I've got a laptop. I mean, I also use
Mm,
Windows, but I use both. But I love Apple products, and so my frustration is one of hope that they actually get it sorted out. The other thing I'll say, and then we got to go, is that Apple is usually not first. They usually they're not the first movers in new technology. They have a track record of this. They don't move first, but they usually get it right. So let's hope that they do get it right and they dominate the AI market too. Anyways, Kenzo, thank you for coming on. I know we got to jump off because we got our next show host. He's been waiting, so I'm sorry for that. But Kenzo, before we go, everybody who's been listening, who enjoyed your commentary, can find your YouTube channel. We're going to drop the link here in the chat to everybody to check out Kenzo on YouTube at Extra Hot Forex. Please take a second to go do that. Kenzo, I can't wait for our next conversation. We do this every week. Thank you for coming on and sharing your thoughts.
Thank you very much, man, and also your viewers.
All right, have a nice weekend, Kenzo. Okay, guys, up next, we've got Forex James taking over the show. Just a reminder and a last call, the EdgeFinder free week ends on Monday. If you do not already have a copy of the EdgeFinder free event that we're doing, you can find the link in our free to join Telegram channel. We'll drop the link in the chat here right now. We're going to go ahead and transition into Forex James taking over the show. Like I said, don't miss the chance to try out the EdgeFinder. That's your last chance for a long time to try it out completely for free. There you go. And up next, Forex James. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello, gamblers. How's everyone doing? Happy Friday. It's good to see you all. Hope you've all performed well. It's not just Friday. It's not just the end of the week. It's also the end of Q1. So it's now not just a case of how have you done this week or how have you done this month. It's how have you performed this quarter. It's a case of reflecting, looking back at your trades and figuring out what the plan is for Q2, Q3, Q4, and what you're going to do to dominate and outperform the institutions again. So that's my motivational speech done. Currently in NASDAQ. Yesterday on yesterday's segment, we were talking about NASDAQ, and I think I took an entry on stream. I'm not sure. Mike? I want to say my mic's not working, but everyone else seems to hear me. Mohammed, check your volume. I think it's okay. Anyway, we'll carry on until I'm told otherwise. The gap on NASDAQ was filled. Now, we were talking yesterday that it is a possibility. Hold on, let me just move that. It is a possibility that we see this candle get corrected as well, which does seem to be what's happened, because we're essentially not just correcting the gap, but we also had a very aggressive upside move that typically does get corrected. Again, I always say it could take a day, could take a week, could take a month, but normally we do see corrections in the markets, which is what, fingers crossed, is what's happening here. And now we're going to go and rocket and create new all-time highs on NAS. That would be the perfect situation, but we'll see. Euro Swiss called this one in the Discord, and this one's moving quite nicely. It's been one of those trades that's been very frustrating to take or to hold. Even the entry was bloody annoying, to be honest with you. So I entered quite aggressively here. I didn't stick to my rules perfectly. Normally, I would have waited for this 0.5 level to get hit, but due to the rejection we saw on this bearish candle and the support level this was at, I was willing to take the risk, and I said, you know what? If it comes down lower, it's fine. Now, in hindsight, if I just waited, I could have entered here on the 50%, as I normally would, which lines up with the 200, oversold RSI. So I kind of messed up the entry. I'll be perfectly transparent with you. It wasn't the best entry, but the trade is fine. I think the fundamentals are fine. I still like it overall. Google, total mess, complete failure. This is why I don't trade stocks, so I'm not looking at that one because it'll upset me. I'm joking, but there's nothing to talk about on Google. It's not my trade. I don't really know why it's there. It just is. I followed one of my stock traders' tips, so I'm going to have to file a lawsuit against him, I think. Aussie New Zealand, I think, is still completely fine. It's also run against me a little bit. Now, the situation I'm in, I've had one of the best months I've had in a long time. So I'm up. Let me just see. So we're up 11.5% this month. So this is our just the log of what we've taken for our signals. So we're up 11.5%. So I'm not too concerned if we have a little bit of drawdown or maybe 1 or 2 stop losses to end the quarter or to end the week. Who cares, to be quite honest with you. But I think this trade is still completely healthy. The technicals are still supportive. It's still in a downtrend. The fundamentals are still kind of there. So I'm quite happy to hold this one. But again, it is a little bit risky right now. Euro dollar shorts, been in this one for a while. I've also been scalping euro dollar. As you guys know, I do implement a dollar cost averaging strategy, which I've been doing on euro dollar, which I can show you here. So this is MetaTrader. So you can see this is the initial short position that we took right at the top. And you can see I've been sort of scalping, day trading a dollar cost averaging strategy. So nothing too crazy there, just accumulating some profit. S&P 500, similar thing as NASDAQ, but managed to get a much lower entry, so I'm not really too bothered about this one. And dollar yen, I'll be honest, I've got no idea how this trade is still alive, but it is. So we soldier on and we let it go. We can't do anything at this point, so there's no point cutting a loss here. We may as well just let it hit stop loss or come back down to entry or even some profit. So we can just wait. Anyway, let me read the chart. Let's see what's going on. Okay, so Mike is fine. Sweet. Took a short on the S&P. Very nice Chavon. I took a short on NASDAQ. Sorry, not NASDAQ. On the DAX this morning. Took about 0.5% on that one, so that was quite nice. Just to again accumulate some profits to end the quarter with. You went Euro CAD. Okay, let's have a look at Euro CAD. Oil prices are chugging to the upside, so I think Euro CAD likely is coming down. Let me just try and find it. You know, it's funny. I look at this watch list all day, every day, and I still struggle to find what I'm actually looking for. So yeah, downside in Euro CAD overall. I wouldn't be willing to take a trade on this one. Again, just because we do have the potential for tariffs to slightly change at the start of April. We've still got oil prices coming up. Euro is supported, but I wouldn't say it's got a huge bullish driver right now. So I wouldn't really be looking to go long. It's more, yeah, I don't know. I'll be honest. There is no trade here for me. I'm just a little bit too conflicted between Euro and CAD right now. James, any idea why tariffs are making USD weak? Yeah, because it's not just tariffs. Trump's tariffs also started a trade war. There's some concerns around data as well. So it just wasn't really an optimal time for the dollar. Although, it's actually fallen off, actually. Interesting. Yeah, so after we had PCE today, dollar's not been very happy with that result. Yeah, it's interesting. So the dollar, yeah, it's a little bit tricky. I'm finding it hard to really determine what to do. Realistically, I would like to see this fib level get hit and then look to go short for a sort of longer period. So maybe for the next quarter, I would look to go short on the dollar. The problem is it could actually, in theory, could run up all the way up back to the top and correct this full move and then head lower. Really don't know. I am bearish on the dollar for sort of the medium to long term, so the rest of the year. But yeah, short term, I'm a little bit perplexed, I think is the word. Mike's not the same as it was an hour ago. Oh God, you guys are picky. Right, fine. Let me just check my settings. Hold on, hold your horses. Don't riot just yet. Okay, maybe that's better. I don't know. We'll see. Thoughts on gold? Yeah, I'd love to go long on gold. But the problem is, it's just not giving any pullbacks. So I would have really wanted to see a 50% pullback here, which is why I didn't enter here. I saw this bearish movement. I was like, okay, likely it's going to come down to about 50%, which it didn't do. So in hindsight, maybe I should have just been aggressive and gone for it. But, you know, that's one of the parts of following a system, following rules. You're not always going to get a good entry, or you're not even going to get an entry sometimes. So in this case, there is nothing to do here. all I can really think of doing is just looking for the next pullback, whether it's a short pullback like this, and I won't miss it next time. I will just take an aggressive entry. Or if we get maybe a profit taking move and bring us back down to, whether it be 50%, the 618, whatever it may be. So yeah, looking to buy gold, but I just can't do anything right now. It's too high up, and buying here, in my view, would be a bit silly. Thought ball out won despite not entering. Ball out wins everything. He doesn't have to enter. They call the lottery numbers, and the winning ticket just appears in his pocket. My opinion on Swiss yen. Yeah, I don't know. It's annoying because I really do still like the Swiss yen short idea, but it's just playing around a bit too much for my liking. The daily looks really convincing here. Yeah, I mean, this is the fib level, it's previous structure, bearish moving averages. The daily 200's getting rejected slightly here. So yeah, technically it looks fine. We also had higher inflation, Tokyo CPI, so that was a little bit of a factor to support the yen. But I just don't see the Bank of Japan hiking rates soon. I feel like they're just going to wait until the second half of the year, which will be annoying. But it's a case of just really trying to time a good entry. But yeah, am I willing to go in now? Probably not. Maybe if there's not really even a trend line here, is there? It is an uptrend, but there's not really anything there to gauge it. I suppose you could do that and try and wing it a little bit. But yeah, I think the simplest way to do this would be to either see a rejection, a retest, and a continuation to the downside, or just a complete break of structure, whatever you want to call it, is making lower highs, lower lows, and then we sort of just continue down. But yeah, right now I'm a little bit too hesitant to go in. It's not as attractive as it was earlier. But my overall idea hasn't changed. I'm still bearish, but yeah, it's just a case of waiting now. EU plans concessions for Trump after reciprocal tariffs hit. Yeah. I think April is going to be, or at least the first week of April might be a bit of a bloodbath, because it's not just tariff news. We've also got NFP coming. We've got a very busy week next week. So make sure you got your seatbelts on, your hard hats on. You've got your risk manager set to 0.1. Or on the other side, you just go full margin, see what happens. Have some fun. That is a joke, by the way. Please don't do that. Swiss yen is the worst. Yeah, it's been very difficult to trade, I'll be honest. A couple of weeks ago, when I was first talking about it, it seemed like a very clear, easy trade. But, typically it's not worked out like that, but what can you do? We can, but wait. So yeah, I mean, I'll be honest, watch list is pretty non-existent. I've got things here, but I'm not actually interested in them now. This was from last week. So let's see. You know what's annoying? Dollar ZAR was really, really nice. So the technicals here weren't what I normally look for with the fib. This was more of just a momentum trade, looking for this 200 moving average, following the channel, keeping it as simple as possible. In the COT data on the EdgeFinder, the ZAR is the most bought, or was the most bought. Dollar was the most sold. So on paper, on face value, it looked perfect. But the annoying thing is, I set this up and I was like, okay, I'm going to take this trade. And you know what's annoying? Darwin, which is the account I'm trading on at the moment, they have dollar TRY, they have dollar Mexican peso, they've got the dollar Singaporean dollar, they've got all the dollar pairs apart from dollar ZAR. I was very annoyed. But what can you do? Dollar Mexican peso, maybe. Probably not, though, to be quite honest. Tide yen also had a great setup, just like Swiss yen does. So if we look on the daily, the only problem is it's a little bit too far away from this 200 moving average to be you know, like a perfect setup, whatever you want to call it. But it is at previous structure. It's at the fib. RSI is quite elevated. So technically it looks good. But again, we've got oil prices. We've got tariffs next week. So I just can't trade the Canadian dollar right now. I think it's a little bit too much of a gamble in my view. Pound yen. Yeah, pound yen. We took a trade on pound yen yesterday. Worked out quite well. We took about 1.1, or you know, just a 1% gain. Nothing too crazy. I'll be honest though, I think it's a good hedge. So if you are someone that's trying to get on this yen bull idea, and you are trying to short CAD yen, Swiss yen, whatever it may be, I think pound yen is probably a good idea to actually take a long position on. First of all, because we do have quite nice momentum here, very clean trend, very clean channel. Excuse me. The yen at the moment is lacking momentum. It's just not really doing anything, and it is giving back some of the gains that it got earlier. So we can see here, in my view, this is a change of trend now. So I would be happy to sort of hedge the yen idea, or the yen long idea, by going long on pound yen. So essentially we'll be selling the yen on this one. This is also kind of backed by the stability of the Bank of England at the moment. Yeah, I don't like the pound, to be quite honest with you. I've never really liked buying the pound, but for this situation, I would probably do it. Always check the times. What time are we on today? Okay, cool. So we got Chris Pulver taking over the show after me, so that's cool. What else have we got? I know the gilts were rising. That was a bit of an issue, but they seem to be calming down a little bit, so that's fine. Oil's tricky as well, because from my fundamental process and the research that I do, oil does sound quite bullish, but I just can't justify going going long on oil right now. This higher time frame support, or you know, whatever you want to call it, this looks really attractive, but it looks too simple. And you know what that saying is: if something's too obvious, you're likely going to get liquidated, or however that saying goes. And to me, it just seems a little bit like a trap. Seems, yeah, too easy to try and buy this. So I'm just going to stay away. Just a bit of intuition, a little bit of a gut instinct. And we've also got the factor that when Trump came into office, there was pretty much two main narratives that we heard about, especially for sort of me and traders that trade like me. There was the tariffs, but there was also oil, and he spoke heavily on oil. Drill, baby, drill. He wanted to take over Canada. Canada's obviously very heavy on oil. There's Greenland as well, that's heavy on oil. So there's big pressure on them. And there was also Trump wanting OPEC to reduce prices. So it was like, yeah, it's a pretty big wet blanket on oil for a while. So what I'm thinking is, now he's getting tariffs out of the way, that saga might be coming to an end pretty soon. Is he then going to move on to oil? Is that the next target in his scope? I don't know. So I'm just being a little bit hesitant. So there is that. Dollar CAD, same thing. As I said, what was it that we looked at before? There's a different CAD pair, but yeah, same thing. I've got no interest in trading dollar CAD right now, because we've got more tariff-related news coming. Is it the 3rd or the 2nd of April? I can't remember the exact date, but I know it's at the start of April. There is still a trade war going on. We've got oil rising, so it's, yeah, to me, it's too uncertain. I don't have a forecast to say, okay, well, I think it's going to go up, or I think it's going to go down, or whatever it may be. I just don't know. I'm not going to put money on the line for essentially a 50-50 gamble, as far as I'm concerned. And maybe that's me being a little bit uneducated or a little bit ignorant regarding tariffs, possibly. I don't know, but I'm just not willing to put money on it. And that's what trading is at the end of the day. It's putting money on what you are very certain on happening. And I'm not certain on either thing happening on dollar CAD. From a technical view, however, suppose we've got a level here. We've got another level there. So yeah, if you're a bull, if you're wanting to buy this market, then you'd be looking for sort of a continuation to the upside, obviously, or you'd be looking for a break of this support, a come down to retest this low, then continuation higher. However, if you're a bear, you'd want to see essentially the opposite. So break, retest, continuation down, retest here, continuation down. But yeah, as I said, I don't have a clear direction, so apologies. Can't give you much on that one. What else? That's pretty much it, to be honest with you. I'm not really looking at anything just now. Seems like the NAV and the S&P just aren't doing anything. It's really struggling to catch a bid at the moment, which is annoying because I really wanted to end this quarter flat, but it's just not happening. So yeah, how is everyone doing? Is there anything you want me to look at specifically? So as I was saying, just yeah, nothing on my side of things in terms of watch list or anything of interest really. New Zealand dollar CAD. Yeah, this was the one we just looked at, wasn't it? Maybe, I can't remember. Again, technically looks really good. Actually, I do quite like it, but Canadian dollar. I just need some clarity. Aussie New Zealand. Yeah, let's take a look at Aussie New Zealand. I am in this short here. It was, annoyingly enough, actually, it was on the EdgeFinder yesterday with a -8. It's now currently -4. So it's lost half of its bearish score overnight, which is, yeah, it's frustrating. However, I still think we can get some downside here. I might not get the full trade that I'm looking for here. I, to be honest, quite happily close just a 1-to-1, just to sort of get out of this market. It's a very ugly trade, or sorry, it's a very ugly market to try and trade. It's very, very range bound. So normally you will see sort of trends. You know, you can see here it's moving to the upside, but to move to the upside, it's very choppy and it's very difficult to try and catch this. Yeah, I just don't want to sit through this for much longer, to be honest with you. It's been already, you know, this first trade we had, essentially just consolidation of finally hit our take profit. This one, consolidation, now drawdown. So yeah, we'll see. But yeah, like I said, I think further downside is reasonable to expect, but when? Your guess is as good as mine. Aussie US dollar, okay. Let's see what this dollar's doing. I'll be honest. I actually would quite like to go short, but that would really just be banking on the US dollar continuing some short-term correction. So I think looking for a short-term short position into then going long is actually quite reasonable. So I'm not going to take this, but you could potentially look for a short here. Maybe even just go for something like a 1-to-1 here and just look to take it back into these lows and then assess how the dollar's doing. And then we could maybe start looking to go long if we come down slightly lower, something like this. And again, this will be banking on my dollar short for the rest of the year idea. So if we look at how the dollar crosses moved for the past sort of 4 months, a lot of them, so euro dollar, pound dollar, Australian dollar, New Zealand dollar, all really slid. And this was because of the dollar dominance. So it wouldn't be a shock to me if we do slowly and gradually see this start to get corrected at some point. Obviously, you know, the drawings are just for visual effect. But obviously, as swing traders, day traders, whatever you are, it's going to be a little bit difficult to try and catch. So yeah, I think that's probably what I would look for. Maybe even a position like this, actually, I don't mind. Maybe not so high up there. Let's just go for a 1-to-2, but go for a swing trade, and then we could sort of scale in as the market runs. Don't mind that idea, actually. But yeah, again, it's dependent on dollar data, to be quite honest with you. It is expected for the Fed to start cutting in the second half of this year. But again, we'll have to just see how the data comes in. What else is there? Yeah, yen pairs are just very difficult right now to trade. I think pound New Zealand longs are still quite relevant, actually. I think we could probably capitalize on something here. I missed my entry at this this fib pullback. I just wasn't very happy with it. But I think if we come back down, I would quite happily actually take another position here, something like that. So I think pound New Zealand's probably one to stay on the watch list, actually. Pound dollar. Yeah, I'm not really interested in pound dollar. I think euro dollar will continue its downside. We might see obviously short-term corrections and pullbacks and things, but I think generally we will continue to the downside and possibly fill or correct this aggressive upside we had earlier. Excuse me. So we'll see if we can get that. If we can, again, like I was talking about on the Aussie US dollar, I might look to pivot long if we can come down to this previous level where we had the resistance and then the break. Because that would technically, where's my arrow? Yeah, this would technically then be a break and retest. And as I said, I don't think the euro is necessarily a super bullish currency right now, but it is supported. And if we are going to see continued downside on the dollar, I think euro dollar longs could be great. And again, we could look to see a correction of this sort of 3 to 4 months downside that we saw. So we will see. Seems I'm trying to get this BYH. I don't. Oh, okay. I'm trying to get this, but I don't. Why is dollar very strong right now? Yeah, we had core PCE index hot. So the dollar's not strong, actually. The dollar is, since PCE, the dollar's actually fallen off. But we are seeing a pullback, which is normal. You know, I say it quite often, but when we get aggressive news moves like this, whether it be NFP, PCE, whatever it is, normally we will see a correction. I think if you're talking about this move, though, about why the dollar's risen up, I think it's a little bit of capital flows. So when we saw the euro benefit heavily from the German stimulus and also the less restrictive policy from the ECB, we obviously saw the dollar lose capital, lose interest, and we got that capital then pumped into the euro. Now, I think it's kind of the opposite. I think now that that's priced into the euro, we might be seeing the sort of repricing. So we might be seeing the euro slightly lower, capital getting put back into the dollar. We've also got the fact that the Fed rate cuts don't seem to be on the table immediately. Again, it seems to be more be a thing for the second half of 2025. So yeah, I think the pressure on the dollar just isn't there right now. But again, this could completely change next week because we do have a very busy week to sort of pay attention to. But yeah, that's kind of it, really. I'm just trying to think again. I feel like I actually haven't really spoken about much or anything that valuable on this stream, which isn't great. I normally like to have at least one thing that you guys can take away. I don't really feel like I've discussed anything that's that valuable this time. Just trying to think. What's in the EdgeFinder? Let me just have a little look-see. So gold's bullish. That's not really a surprise. Nasdaq's bullish. It'd be nice if the price action could reflect that, though. The S&P as well. Bitcoin. It's interesting, actually. The yen pairs have flipped. I didn't notice that. So if you remember a couple of weeks ago, all of these yen pairs were reading either bearish or very bearish. Now they've all flipped bullish. So yeah, I think actually pound yen's the worst one. CAD yen, New Zealand yen longs. Maybe that's a play. Maybe we could do that. Let's see. Let's forget that we've got a bullish bias on this. Oh, sorry, a bearish bias, and let's see if we could look for a long. So the weekly is bullish, the monthly is bullish. We've just rejected the 50 moving average on the monthly time frame. The H4 moving averages are about to flip. So as I was saying, although I'm bullish on the yen, it is a long-term view. So it doesn't mean I can't change short-term views. If I see something that make me want to buy short-term and then maybe pivot pivot the opposite way for a longer-term trade, that's kind of fine. So let's just see. I think actually this doesn't look too bad, and this is a great example actually of why technical analysis isn't really the holy grail that people say it is, or people make out, because you saw technically I was bearish. All I did was remove it, redraw some stuff, and now it looks like a bullish market. So yeah, maybe something like this. Again, this would just be a little bit of a hedge or a little bit of a contrarian view against myself, actually going just with the EdgeFinder in the short-term momentum, but I quite like this. So I'm going to just keep paying attention to it because we might be able to catch something here. Pound dollar go up, pound dollar do go up. Yep. Yeah, the dollar's weakened quite significantly, or short term anyway. So yeah, that's pretty much a given. I wouldn't expect much, to be quite honest with you. I think for the rest of the day, I actually think it might be quite flat. And again, that's more due to the fact that we've got really quite an important week coming next week. So I think it really depends on what happens, but I wouldn't want to go into buys. And again, that's just because I think we could see a bit of a larger correction of this, maybe even slightly lower. But again, I'm just not willing to put money on that yet anyway. However, if you are wanting to buy it, I think something like this would make sense. Just look for a 50% correction here, and then maybe look for a long position off that. I think that's kind of the only way I could see that as being a reasonable approach for the way I trade anyway. I realize my camera is really blurry. Hold on, sorry, I've just looked at this. Why is that? I don't know. Oh, there we go. That's why. There we go. That looks a bit better. Apologies, didn't realize that I looked like that. Okay, so yeah, I think dollars are still a pretty good choice actually. If well, I can't trade dollars are anyway, but you know, if you can trade it, I think it's still a great option. Dollar Swiss, sorry, not dollar Swiss, pound Swiss. I also still quite like this, but it's similar to what we were talking about in Aussie New Zealand, with it just being a very range bound market. Although we can have trending periods, those trending periods are still very messy and very noisy. But if you can have a sensible stop loss like this one, it looks like looks like it might be too wide for some people, but in a market like this, you kind of have to. I'm not going to buy here, but if we could get a slightly larger pullback, I think stop loss just below the lows, and maybe not even a take profit, maybe just let the trade run, and trail stops might be quite reasonable. You could, in theory, target this previous high. Actually, this was at around 1.16, I think would be quite nice. Yeah, I'd have to do some research on this. I need to do my weekly research, but I do those on the weekends. So I'm gonna have to come back to this one. But right now, I quite like it. Again, I'm not a huge pound bull, but with the Swiss, let's see what the Swiss is doing. It's very sideways. So if there is a reason to go long on the pound, I think against the Swiss is a pretty good idea. It's essentially a proxy to just buy the pound, especially the Swiss is just sideways. So I'm just going to talk more on tariffs to drive it down there. Not that it's going to make it bearish anyways. Yeah, let's take a look actually. Let's just have a look at next week. What's the plan? So Monday we've got China, we've got European German prelim CPI, Chicago PMI. I'm actually going to put this on the dollar because I just want to see what is actually coming. So Tuesday we've got ISM manufacturing PMI. We've got JOLTS. Wednesday we've got ADP. So Wednesday will be quite boring because ADP is not a huge market mover. Thursday we've got unemployment. We've got services PMI. And then on Friday, we've got average hourly earnings, NFP, unemployment. We've got Powell speaking. And that's on top of the tariff stuff. So yeah, have fun. Hopefully, you're not going to gamble that because I think it could end up in some blown accounts. Maybe. I'm saying all this, and it could actually just be a really boring week. I don't know. We'll see. It's great. Yeah, S&P is continuing downside. Eurodollar's coming up. New Zealand, Aussie, New Zealand. Yeah, Google's open low. It's probably going to be a stop loss today. Euro Swiss is doing okay, and the NAS is continuing down. What a rough way to end the week. Very unfortunate. Canada's Carney and Trump on call this morning, so I would expect volatility on lower timeframes. Yeah. It'll be interesting to see how it plays out. Because I know Trump said if Europe and Canada basically conspire to retaliate against the US, tariffs are going to be exponentially higher or significantly higher than what they already are. But I just don't see that. I don't know. It's difficult because if Europe and Canada don't fight back, they're just rolling over and taking it. But if they do fight back, the trade war is just going to get worse. So, what is the best option? What would you do? I don't know. What would I do? Yeah, but I'm not really sure. But I'll be honest, I've got nothing else to talk about, so I'm quite happy to just talk about Canada. But yeah, I don't know what I'd do. I think I'd just take the trade war, just bite the bullet and go for it. See what happens. They'll need to step down to Daddy Trump. It does seem that way, unfortunately, which I don't like because I don't like the fact that he's throwing himself around like the playground bully. Might actually be able to get another short on Eurodollar at some point. Let's have a look. You know what? Let's go short. I'm just gonna go one lot. Just keep it simple. Go for another DCA short. That's the reality. Yeah, I think it might be, or I think it is. So let's go for a small trade here. What's the? Yeah, so just $600 take profit there. Nothing too crazy. Room to scale in if needed. Don't follow this, by the way. This isn't a signal. It's a pretty high risk way of trading if you can't manage risk. I'm already in a position, so my average price is already very high up, so I'm completely fine. My risk is managed. Really not happy about Google. This could not have been a worse entry. Yeah, unfortunate. Euro Swiss might be the saving grace, though. Yeah, sad times. But what can you do? Yeah, I like this. I'm going to set an alert just so I don't miss another entry on this. Let's set 50%, set the alert, and then we can still just sit back. At the top of EU. You know what? I would love to be able to take credit for that entry, but unfortunately, it wasn't mine. This entry right here was by the person I'm running this portfolio with. But yeah, he did a great job with that. I did. So you start when you first started trading, how emotionally fueled were you as a new trader? Oh, I did all the mistakes as a new trader. Moving stop losses to avoid a losing trade, adding into losing trades when I didn't know what I was doing, counter trading trends, over leveraging. I did all of it. Every mistake you could make, I made it, I promise. I don't trade individual stocks. No, I stay away from the stock market because I've got too much to pay attention to. So, like I said, I do my research on weekends. So I'll spend maybe 4 to 5 hours on a Saturday, and that's just reading through bank reports, taking notes, just seeing what the institutions are saying and what they're doing. Then on Sunday, I'll sit down again for maybe another 4 or 5 hours. I'll do my own analysis. I'll go on the charts and say, okay, well, JP Morgan's looking at this. What do I think about that? I'll put it all together into some trade ideas. I don't want to then have to go into stocks and add on to my research because it's just another layer of stuff I'm going to have to keep in mind and think about and put work into. And I've also got other things going on. I run businesses, and yeah, not for me. Is what I'm trying to say. I also don't like stocks. I don't like the way they move. I don't like that they open with gaps and things. Obviously, currencies can as well, but normally currencies are a bit easier to manage. James, do you ever not go to sleep just watching your capital get liquidated overnight when you're still in it and you trade it? Yeah. One of the core memories and the point where I decided to stop what I was doing essentially and sort of go back to the drawing board is when I used to work in live TV and broadcasting as a designer, a motion graphics designer. So I used to work night shifts and morning shifts and all sorts of stuff. So I just finished a night shift, and it was London session, and I was on US 30. I didn't know about sessions, like what moves in what session. I didn't have a clue. I just knew it was London session. I'm going to trade. So I was on US 30. And I remember I was selling US 30. I probably had about £7,000 to £8,000 in my account, which at the time that was like everything I had. That was all my money. I was putting one lot here, one lot there, two lots there. I was essentially just selling the uptrend because I didn't know about trends, didn't know anything. So yeah, I was just watching that get liquidated. Then I had to be up at 6 a.m. the next morning, so I was up all night just watching my account go from essentially my life savings to nothing. And I had to go into work and act like nothing happened. Ball out, stopped out of the S&P. Buy again. Let's see. Yeah, but ball out this time. What I would suggest is buy again, but triple the risk and no stop loss. And then if it doesn't work out, you triple the risk again. If that doesn't work out, you sell your car and take out a second mortgage and buy again. And eventually you'll be cool. You'll be sat there and be like, wow, I'm glad I listened to James. That was a good idea. That's not financial advice. Should probably just clarify. I'm really glad Dolly Yen's come back down, actually. It's a little bit annoying because when you get ready, when you trade is so close to stop loss, you're mentally prepared. You're like, okay, well, the trade's gone, it's happened, whatever, move on. And then it comes back down, and you got to mentally get back into the trade. And then you're like, oh, I got to start thinking about this one again. So it's a little bit draining, actually. So I'm not very happy. I'm going into the new week with quite a lot of exposure, actually. I'll wait for the monthly candle to get its own low taken up for a buy. Cedric, that sounds like a good idea. Nasdaq's not looking good. No, it's not. Look at Royal Trades flexing on us with his minimal risk. It's what separates boys from men, Royal Trades. You either go big or go home. Gold's interested on the H1. No, it's not. I didn't mean that in a rude way. There's just nothing to do here. So, can't buy it. I'm not going to sell it either. So, yeah, Nothing to do there. Yeah, 0.5 to 1%. I normally range from 0.5 to around 2%, depending on the trade, which sometimes can be actually be a terrible idea, because then the one you end up risking less on is the one that works out. The one you risk more on doesn't work out. So it's not always great, but you know, over the long term, when you got high probability setups and ones you kind of just wing, it can be okay. That sounds really unprofessional. I don't mean just clicking buy and sell. I mean ones that, are essentially a perfect setup, and ones that may be a little bit lower quality but still might work. Sizing figures is my favorite. That's true. So what we can do, I say we, I mean, as not quite literally we, but essentially it's averaging. So if we get the initial entry like we've got here, and then let's say, um, hypothetically we just bounce from here, we can start, or I will start getting in. So buying lows, trailing this stop up, and yeah, just building a position over time. Because what theoretically could happen here is we're all sat here talking about buying the S&P, buying the Nasdaq. Yes, we might, you might be a little bit of a difficult time right now. We might get stopped out. We might get a bit of a messy trade. But eventually, when this market decides that it's time to come back up, so again, let's just say we do something like this. This could be a huge position to hold for the rest of the year. This could be, the trade that you look back on in 5 years and you could be like, wow, I bought that dip on the S&P and I held it, is the main thing. But like I said, right now it looks a little bit bleak for us. James, we have a prop firm? No, I don't like prop firms. I will never. I worked with one before, and the essentially the only thing I got was a free evaluation account, and it was like 10% commission, which was pretty crap, to be honest with you. But it was a really dodgy firm. They're still around today, but they've got really bad reviews. It was like when they first came out. But no, I'll never work with a prop firm again. Did it once, never again. Hate it when you see the people on Twitter or X, and they've got those prop firm affiliate badges, and they post how to properly draw an FVG, how to properly draw liquidity. Like, shut up, idiots. Anyway, that's a story for a different day. Yeah, these positions not great, not great. So looks like I'll be ending the week with a bit of a loss, which is unfortunate. James 1 to 10, how confident are you? I think I could stop trading now and I would outperform ICT. That's how confident I am. I just don't. I think either I won't get a reply from him. He'll completely ignore me. He'll block me, or there'll be some sort of excuse. So this is the down account. That's the one I just placed EU short. That's the one I've been showing you. So we've just been put through. We finished our calibration. We're up 8% with a max drawdown of 4, which I would say is pretty strong. Not the best, but it's strong. And if you look at his trading results, historically, he blows every single account he's ever shown. So as long as I'm up 0.01%, I'll have outperformed him. He's a clown. I apologize because this isn't my channel to be talking about people like that, but I think we're all on the same page. No, it wasn't Apex. I won't say the name of the firms. They're not relevant anymore. They're not like a big name in the industry. They were for a short time, but not anymore. I'm not very happy today. but it's fine. Maybe we get something here on EU. Might be able to just average in. Me too, Royal. So I'm just thinking about what's my plan here on EU? How am I gonna, what's the right approach here? So ideally, I want to be out of this by the end of the day. But whether that's going to be possible is a different story. Yeah, we'll see. We'll see what goes on now. Do I know Justin? No, I don't know who that is. Never heard of him. I don't really look at the trading community, whether it's ICT or not. I don't really pay attention to people. I was saying this on my stream. It's not coming from a place of hate or anything. It's purely just because I don't care. Like, you know, if I'm sat here working, I'm going to be watching a show or I'll be listening to music. I'm not watching YouTube videos, especially from traders, or I'm not sat on Twitter trying to learn things from other traders. So I'm just not in that sphere of things, really. Like, I'll post a tweet or I'll post an Instagram post and I'll close it. I'm not sat there to really do anything else. Sometimes stop losses do suck. Every stop loss sucks, but you get used to it. Lose the first few trades on a prop firm is the worst. Yeah, I have been there. It's sad. You know what's even worse is when you finally get funded and then lose the account the next day. That was the worst one. So unfortunate. What a sad sight this is, but it's what it is. I'm happy to hold it because I think it's still valid. It's just, it's having a hissy fit. It's having a bit of a tantrum. Oh, wait, actually, what's going on here? Pound New Zealand from 15. Yeah, I'm not going to take this. Just I've already got too many trades open. I don't want to take into a new trade, but I quite like this setup actually. 50%. We're having a bullish candle form on the 30. Still got 15 minutes for this to close, roughly. What do you think about Apex? I don't know. They're a futures firm, aren't they? I've never traded futures. I don't know. Stick EU on the EdgeFinder. I'm fairly sure EU's bullish, but I'll be honest, I'm not trading on a fundamental view at the moment. I'm trading for a correction. You learn to trade by yourself? Kind of, yes and no. I learned fundamentals from a family friend, but I learned how to apply it to trading pretty much on my own, yeah. In gold, sell again, SL over the high. See if we can make something out today. Fair enough. Let's have a look at gold then. So ball out selling gold. Yeah, I definitely not for me, but I could maybe kind of understand why. But guys, I'm off in a minute or two. My time has come to an end, unfortunately. So if there's any final questions, please let me know, because Chris will be coming to take over the show after me. Oh, okay. So you're just day trading it down. Fair enough. Scalp type risk. Yeah, fair enough. I guess it's basically what I'm doing on euro dollar. So just top stuff and funding pips. Very nice. I learned basics from Nick, and the rest from just common sense. I gotta say, trading is a lot of common sense. Oh, well, actually, I guess it is common sense, but you get that common sense from being in the markets. It's more like a gut feeling, I guess. I lost $2,000 today on NASDAQ. Oof. That's unfortunate, Farhan. Franhan. All out. Nice one. I'll talk to you later. What are you buying now? I'm not buying anything now. I'm just selling I'm selling euro dollar. Sean, good to see you. I hope you have a good weekend as well. Like I said, I'm just waiting for the message that Chris is coming. Until then, I'm stuck with you guys. But that's fine, because I like all of you. Rashi, yeah, you too, my friend. Yeah, I'll probably cut euro dollar, to be honest. If we don't see some downside here, I'll likely just get out of the trade. I'm not looking to really hold on to anything, especially any short-term trades. Yeah, these stocks are hurting. Looks like ball out was right on gold. Nice downside there. Selling Bitcoin? No, I don't sell Bitcoin. I don't trade Bitcoin. I don't touch crypto. I invest in it, small, very small, but yeah, I don't trade it actively at all. Okay. The yen's doing really well, actually. Dollar's selling off. Euro's doing well. Interesting. The yen's doing really well, actually. Wow, dollars are. It's a good thing I can't trade dollars are, actually. Never mind. Ignore all the complaining I did earlier. Why in the EdgeFinder is NASDAQ bullish when it's not? Because the EdgeFinder takes into account data. It's not looking at price action, really. It accounts for the trend, but it's not looking at candles. It's telling you what the data is and what that data means. So just because the NASDAQ is fundamentally bullish, it doesn't mean that it can't have some downside or it can't have pullbacks. Remember, the hedge fund is not really a way to time the markets. It's just giving you a bias. And it doesn't, I'll be honest, the data doesn't matter if the markets don't agree. So you could have, in theory, you could have something like the NASDAQ that is very bullish. But if there's something going on outside the data that changes the context, so let's say there's a war or pandemic or something happens, then the sentiment will change. The market will do something different just because the data is saying one thing. If there's another factor that is overshadowing data, then you'll see the markets change as well. Still taking that Nikkei short. Is it pulling through? Oh, that's sad. Yeah. So for anyone that watches me, you might remember I was looking at the Nikkei. I was looking at this area here with the 200 moving average, the fib. It looked fine technically. I just wasn't comfortable selling. And now I'm regretting that decision. Dear, sad times. Lee, don't tell him what. I'm not spilling any secrets, I don't think. Oh, hold on, I've just got. Okay, so guys, Chris is now here. He will take over the show. So don't leave when I leave. You're in great hands with Chris. I'll see you all later. Don't get margin called, as always. I'll see you all very soon. Have a great weekend and have a great start to Q1. Sorry, Q2. See you later.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Friday. How's everybody's slow bleed to the downside treating you? Since yesterday's high, this market has just been steadily working its way back down. Here's the S&P falling. We're seeing some red across the board again. Core PCE came out this morning. PC this morning, not awesome. So slightly higher, which was actually forecasted. So let's go to today, 8:30 a.m. news. Here's the Bloomberg calendar. You had 2.7 was the previous, which was revised higher. Forecasted for 2.7 came in 2.8. That's core PCE year over year. So slightly higher. This is going to be, this is the Fed's preferred inflation gauge. So this would be their reason to say we don't want to cut rates right now. The month over month, previous 0.3 forecasted 0.3 came in 0.4, slightly higher. Your year over year PCE 2.5, 2.5, 2.5 came in as expected for the headline PCE. Month over month, 0.3, 0.3, 0.3 came in as expected. Personal income revised lower from 0.9 to 0.7. Forecasted 0.4 came in 0.8. Personal spending down, revised worse. 0.5 was forecast, came in 0.4. So the main one would probably be your core PCE came in slightly higher. Revised higher, also came in higher than forecast. I'm not saying that's why the market is falling. I'm saying this is just settling back into where there was a pretty important support level when we had FOMC week. That support level is right around 5,600. So we held there. This was FOMC the day after. We held there. We gapped up higher over the weekend. So this week is fading. We were just shy of symmetry. We're right between the 382 and the 50 pullback zones, which makes sense. But these bears have trimmed that lead, and now we're breaking this trend line. So I think right now it's like today's pretty much directionally just straight down. We're going to see if the market has any fight left in it, like high to low for the day, and the market can find an equilibrium. Otherwise, it might be finding 5,600 today, and they'll look to see if there's a floor off of that. So the blue line that I have here, this is a bear call spread, bull put spread combo, and I'm going to see if price will stay in the middle or get there through later in the morning. So watching that trade for my morning, we've essentially just gone straight down. So, I mean, this is the last like 30 plus minutes of trading. This market has gone from 56.86 all the way down to 56.20. So we've dropped about 60 points in the last like 30 minutes. So everything's down across the board. Yeah, I'm just going to hang out and wait, taking a look at some of my other dashboards. We have volume showing declines. We have, advanced decline line is all red. So S&P is down. Advanced decline is down. Not looking too hot. But, noticing that we do have some support to the left-hand side. That's that 5,600 handle. I'd like to see price bounce off it a little bit. Volatility is going up. So if you take a look at the VIX, VIX is heading higher. It's up 8.57%. The VIX 1 day is also, somehow it's red on the day, but primary VIX 30 day is 20.28. So we're back into the 20s on the VIX. Well, are we heading back up? We're about to find out. So a couple things. I did this yesterday in my YouTube session. This would be a good chance to look at the bigger picture. Look, this tariff talk going into next week, end of the quarter. Do we have a high low that's going to provide something like this? Because if that's the case, we better hold that 5,600 floor, in my opinion. If we're going to come back to 5,600 and bounce, that's about the bulls' last chance to kind of defend that zone. Because if this is not going to hold, if it's not going to hold the 5,600 handle, then this likely drops back down to the same lows again. Is this a bear trap? Is this a slightly, oversold plus divergent bottom, and then the market comes back in and defends that 10% level? I mean, there's a couple of key spots the bears are gonna have to step in and defend. So I should have taken that freaking butterfly. I was looking at a butterfly this morning. Let me see if I can reissue the trade here. I put it in for 50 cents. It was trading for like 35 or 40. I'm like, well, let's give me a bounce and I can maybe take the trade. Let me go up in strikes. Yeah, these are all like low deltas now, but let me see. If I pin this thing, that's 15 cents, 30 cents, 35, 55. So could we snap all the way back to 56.95? That'd be filling the gap on the day. That'd be a pretty impressive recovery if we did. I'm going to take this. I'm going to see if I can get this trade for 50 cents. Come on, man. I'm trading right at the mid price at 50 cents, trying to get filled. Open today was 56. So what's my pin price? 95. I'd be looking to get right at that gap today. Come on. 50 cents. You can do it. I have some real-time levels, 56.19. We have just been falling all morning. I don't see a lot of key levels for today outside of 5600. If we hold here, oops. So if we hold at 5600, that might offer a bit of a bounce in here. This is around 5670 or so, 5700. But if we break 5600, this could be a lot of like delta hedging to get through these major floors, and this could be some damage. So yeah, I mean, I'd say if 5600 holds, then there is a support level. If it doesn't hold, then I would say buckle up, and this market can have one of those nasty, nasty days. And I'm still not getting filled on my butterfly trade, you piece of crap. It's like lingering around 50 cents, 46 cents. Like, give me. We should be seeing higher implied volatility. Gosh darn it. So 95. It's like it's trading at 50 cents. Come on. I'll try it again. I'm going to go for 45. Will it fill? Will it fill? Will it fill? I don't want to go less. Dude, it's just making me chase this butterfly spread lower. Let me try one more trade here. If I go 56.85 by 90. That one I should be able to get filled on. Son of a biscuit. All right, I'm just going to let this one marinate. I'm going to go replace, set it for 50 cents, and just see if I can get that thing filled where I want it. So pending order. It's a broken wing butterfly right around today's gap. I need to see the bulls do something better than just be completely absent. This market is just steadily falling all morning. So I'm looking at a pin price right around the gap today. So if price does bounce, that's a good thing. If price goes lower, still watching that floor around 5,600. We'll see. I look at this, it's like, I don't love that level. But actually, probably okay. All right, I'm gonna let that marinate. That could be a little profit trap at the end of the day. Market have to work pretty hard to get back to the highs. All right, anyway, let's do some top down. So everything's down. S&P is down. Equal weight's down 0.9 versus 1.26 on the index. So S&P index down, SPY's down. Equal weight's down a little bit less. NASDAQ down 1.67. Q's down 1.67. Dow is down 1.07. Russell down 1.6. VIX, like I said, spiking back up into the 20s again. Dollar index has been dropping as well. Let's go DXY. Dollar index here. Okay, is it time to sell the dollar? Maybe. Is it turning on the 4-hour? Not quite. I'm gonna wait for a little bit more of a pullback on the dollar. I still like this kind of 200 moving average on the 4-hour time frame. Just trying to pull back a little bit more into this inefficiency from that 3-day slide. So I'm not taking the bait on that potential trendline break. Or if I do, it's got to be, take a small trade here and then go back to either the high or the 200 moving average for a second trade. So, small trade to kind of test the trend line break, 2 to get back to these recent highs where I'd like to sell it. And I could go small trade, stop loss, probably above this structure to be safe, but just above the trend line, and see if this actually does, either break and go or break and retest and then roll over. But I do like looking for a short opportunity on the dollar. Are you looking for gold sells? No. I wasn't a gold sell. I took profit on that, and now I'm just looking for pullbacks to get a gold long, which is probably a ways off. I mean, gold continues to get flows. We're at again all-time highs, I believe. Yep. So we have another all-time high in gold. Again, I think a gold sell is likely. I don't want to fight some silly, global central bank capitulation move that's like everybody is buying gold. So what do you do? I don't want to call the top. I took a trade, I took a stab, it rewarded me. I still think technically we need to have a pullback. I just don't know what's going to be the switch. Is it like a Q1? I mean, we had like a Q1 and gold is up. Do we pivot and have a little pullback because it's Q2 now? Maybe there's a seasonality look to it. But otherwise, I'm not going to force a sell trade on gold. So the way that I did the sell trade earlier was I ramped it up where I had a bull call spread combined with a bear call spread, and that combined for a little profit trap. So I pulled in $1.20. I had a $5 profit trap, and my $1.20 credit, I ended up closing it out for about a 20-cent bonus credit. So I pulled in $1.40 per contract, and it was a little income trade. That was it. I did that trade. It took about a week and a half. So I'd say that's a pretty good stab. And that was before we made 2 days of pushing to all-time highs. So I'm glad that I'm out with some profit. It wasn't really threatened until we're above 32.50. But I would say right now this gold train continues to run pretty hot. And the best part is silver is also participating. So I'm looking at both of my positions. Anything that's gold and silver is still looking pretty good. So my let's see here. Which one is it? This is CEF for physical gold and silver, up $3,300. GLD up $16,000. PHYS up $3,000. SLV trades up about $50 right now. That's good. SLV is up around $17,000. So not too shabby. This SPY trade I might be closing out for profit. Up 43, max profit would be about 48 cents. I'm just going to take the profit here. This is trading close to a full credit. 95 cents, I'm going to take the profit here. 97, 96. Come on, you turds. 95. All right, closed out for 95. That was a 52-cent debit, just closed out for 95 cents. Taking that little winner on the SPY. Watching my levels on SPX today. XSP, watching some key levels. 560 is a key level for me for these next 2 weeks. Put on some futures hedges. These are starting to look better. This is a futures hedge. It's already up 125 bucks. Copper looking good for full profit. This is out to April. I'm not really worried about copper. It's actually it's close to max profit. I think my max profit's around 170 bucks. I'm up 93% right now. And then another hedge for MES flat, but those hedges are pretty big. $985 risk. No, $881 risk for a $5,300 profit. $975 risk for a $44,000 potential profit. I'm not going to get $44,000 on ES, but it would be nice to get even, 5x or 10x would be pretty sweet. If I can get like a 5K or 10K profit out of a hedge, that'd be pretty sick if this market is going to just implode. So we'll see about that, Lee. I mean, that's the buy the rumor, sell the news. We'll find out. I mean, if the market is in angst about the Trump tariffs and this is going to get worse, I think. Look, this whole idea of Trump tariffs. I mean, the market was thinking, okay, this is uncertainty, but remember, this rotation started to happen before Trump tariffs got more vocal, right? I mean, we heard about tariffs. I mean, where the heck was DeepSeek? Where's all that nonsense, right? So we had, I'm trying to think where the DeepSeek stuff was. This was DeepSeek, this was tariffs, I think. So we had the tariff talk early in the year near the all-time highs. And then the market rolled over with that recession, or not the recession, the rotation from Mag 7. That was really the biggest driver, in my opinion, was too much concentration in too few stocks. The market needed to broaden out. To do that, the market had to decline, so it did. Right? This was all Mag 7. The fuel was more tariffs, more kind of hardball from Trump and what was coming out news-wise. And then it started to change. Like the tone changed. Like, oh, maybe it's more softer, more flexible, blah, blah, blah. The market started running with that. Well, I think this, if we're going to head lower, I don't think it's just tariffs. I think this is the market as a whole looking at downward revisions in earnings. That's what I think it is. This would be the market saying, okay, look, this growth is priced too high, and these revisions are going to come in dramatically lower, and that's going to change everything about the current valuations of the markets. So if this gets worse, it's most likely going to be fundamentally driven where earnings are just priced in way too high and they're going to be revised lower. And it's the severity of that pricing change. It's the severity of that valuation change. So if we go from, let's say that S&P multiples at 25 and all of a sudden they're like, no, they're not worth that. They're going to be priced at 20. Well, that's a big shift. And where we're sitting at all-time highs, like that could be, that could easily be a 10, 15, 20% correction in the market. I don't know. So that is why I'm braced. Right? So, like I said, we're coming back down to some key levels. Let me put in another line right here. That is a support zone that I think we should be paying attention to. That was a hold level from March 18th, hold level from the 21st. And given today's price, if there are market makers doing anything today, anything at all, it'd be nice to see them stepping in somewhere to defend some key support levels. I get it. Like the market can go lower, that's fine. But to have this open up and just be straight bearish without having some type of game, like, the market goes down for the first hour. Well, how about we have a little equilibrium, right? You go from high to low. Do you have any just Fibonacci behavior? Anything, right? This high, this low, we pull back to a 38% zone, 50% zone. If the bears want to take it a chunk lower, that's fine. But I at least like to see some ebbs and flows to this movement today. So we'll keep an eye on it. If I've got price coming back into this blue zone inside of this area, then I'm hoping to grab a few bucks out of my SPX trade this morning. Any prop firm suggestions? That's probably a better question for Nick. I don't do any prop stuff with Forex or futures. I just manage accounts. So I don't know. Nick probably has a better insight to that than I do. I know a lot of prop traders that are in futures that are using like Apex and Top Trader. Those are the two primary ones that I hear a lot from futures traders. But Forex wise, I'm not sure. I know 8cap has a good prop situation. I met with their team, not that long ago, maybe last month, and they've got the nice thing is they've got deep pockets and whoever like they're partners with, but that might be for better for non-US traders versus US. I'm not sure. It's probably a non-US trade. So all right, let's go currency strength. Yen strong. That's pretty much it. Yen strong, which is going to be looking good for FXY. It's going to be looking good for 6J, which is my Japanese yen futures. But I'm not jumping back into futures yet. I'm not jumping back into Japanese yen futures. I am still holding shares of FXY, and my break even is around 59 bucks. So I'm still up a couple dollars on FXY, but looking to get obviously much higher. One thing that could be interesting for the currency land in 2025 could be perhaps the BOJ is one of the few central banks that's still raising rates. And if they raise rates while the others are falling, starting in summertime, we might have another similar kind of deleveraging event like we did last year, where there's a rate hike from the BOJ and then the Fed comes down. Just putting it out there, that June rate decision for the Fed, this probability for June, a 64% chance of a cut starting June 18th. This June-July window, I wouldn't be surprised if the Bank of Japan somehow sneaks in some type of like major summer movement, and it's probably not a good thing. So just be on the lookout for some shenanigans out of the BOJ and watch for some crazy Japanese yen price action maybe coming this summer between like this June to August window. So I would think if anything, it's probably it's long Japanese yen in my opinion, probably not short. So I think the JPY gets a little bit stronger. That would be adding fuel to this deleveraging event that was just like we saw last summer. So time will tell, but I'm still long for this reason. If FXY gets back to these highs, that's a nice little flip for $7 or $8 a share, and I'll probably take it. All right, I'm going to keep watching this one. Let me see just a little fib here, just for my own peace of mind. If we have a pullback, if that is the low, this is kind of grasping at straws here for intraday price action. But if we pull back like 30%, 56.40, let me put in a chart alarm there. So that's a 30% pullback intraday. And maybe even the old equilibrium, 50%, 56.64. Couple chart alarms there, see what happens, as opposed to making fresh lows. So we'll see if the market can offer up some type of pullback, and I will watch. All right, that's FXY. Let's go top down still. Dollar index. I still think the dollar is a good opportunity to sell. Case in point, euro dollar, for example. Let me do this. I'm going to scale in. I'm going to do this really small, but I'm going to scale into. I don't know. It's okay. I think the dollar index is a pretty clean trade from the euro dollar. If I took a small trade right now, so if I take a small trade on the euro dollar, that'd be trade 1. I'd probably have to look for either this as a trade 2 or this as a trade 2. So trade 1 would be at market, trade 2 on a 200 moving average or a pullback zone, and then my stop loss would be below these lows. So if I can space this out over a couple trades, risk maybe 1% here, and then see if this to the upside offers up like 1.5%, maybe 2%. I can also stack buy stop orders. If I'm right directionally, I can add more to that winning trade. So what I'm trying to do is, carefully carefully kind of test and keep the drawdown very much in control, and then I can add to the direction once I'm a little more confident that we're going somewhere. There's room for gold to go higher. Silver, absolutely. Silver, there's plenty of upside in silver, in my opinion. I think I see silver going back into the 40s again. Give it enough time, but I mean, silver to me is one of my favorite technical plays as far as the precious metals. It's hard to say gold at all-time highs looks attractive. I know it is. I know that there's central bank buying. I know there's like this automatic bid price. I think anything that gets a decent dip is going to be bought. But silver is the poor man's gold. That's way cheaper. And the gold to silver comparison is, if we have that 2-year range that holds, I think silver gets the upper hand nod. But usually recessionary indicators probably favors gold more than silver. Silver also has a lot of industrial qualities, but technically it's just so much cheaper that I'd like to see that ratio catch up where silver looks a little bit better. Okay. All right. So I may look at this trade. I'm just trying to think like a starter trade. I think this is a fake out though, just to be honest. I mean, if I took a trade here and it's trade 1 and it goes my way, great. I mean, maybe it gets back to the highs again. But I've got to be prepared for, if I take a trade here, it falls right back down to the 200 moving average, and I either put in a second or a third position here with my stop losses below. But I think if I build this area up, this was the inefficiency I wanted to get filled kind of in this zone. And if we head back up on a weaker dollar, then great. And the DXY, it would just be going back down towards the initial breakout point, which is still pretty low. This is my big breakout level. This is the initial breakout point. This is where the market started to show those initial inefficiencies on the dollar right around 100.81. So, I mean, I could see there's a little bit more noise in here, but I could still see the dollar breaking lower. So I'm going to go ahead and position for that on the euro dollar. So if I go in for a small trade right now, so if I go trade, I'm going to take a small order here. I'll go like 50-cent pips. That should be 5,000 units. Take profit's going to be around 1150 to 1180. I'll go 1170. Stop area I'm going to be flexible on. I'm just going to trade this really small for right now, but I'm going to take a buy order at market for 50 cents. And I'm going to put another trade in around this like 106. I'll go 106.55. 106.55. I'll make this a non-FIFO and take profit at 1170. Okay, so that's going to be a pending order. Actually, you know what? Put that one in again. Limit. So 106. 106.55. Take profit 1170. Yeah, I want to make sure I get my timeout here. I don't want an expiration on this trade. So go out to the end of the year. Okay. So that's trade 1, trade 2. So buying at market, pending order at 106, 106.55, and I'll kind of watch that area. Now, if price is going to go up, then I might cancel this trade and just manage this first trade back up to highs and take some profit with a little swing scalp. But if we go test level that comes back down to the 200 moving average, I'm just going to wait. Entry 1, entry 2, watch how this area behaves. This to me should be a pretty strong level of support. So if it is, then I'm looking for price to be bouncing in here. If I get a trend line break, I can start adding a bunch of buy trades in here that I like with confirmation going my way, but I'm trying to keep the drawdown, as small as possible with just a, just a couple of test levels that are small. Okay. All right. So I'm going to throw that in. That'll be in the trade alert section. So my Forex trades, I'll take a picture of the euro dollar, new trades, euro dollar, testing. So I'm doing a buy at 108.26, and that's filled. Pending buy at 1.0655. That's pending. watching DXY closely and liking euro dollar as the primary inverse correlation. I believe DXY can slide lower into the 101 to 100 levels. So I'm willing to test the euro dollar for small trades with long positions. And let's see if the DXY 100 area equals euro dollar 111.50 to 1200 area. Okay, so post that, copy. Okay, and I'm looking for this to be, I'll put on a little long here. And my stop area is going to be probably right below this like 105 area. We shouldn't go too much lower than that, but I'd say probably safest would be, we're making higher lows in here, right? So lows, higher lows, higher lows, higher lows. We shouldn't really come back and take out that low, but you know, if we're not cooperating at the 105 handle, then I'm going to stop out probably just below that. So that's pretty much what the reward risk looks like. Okay, so take a screenshot there, post it in the alert section. Okay, trade is in. All right, all that was just kind of a segue on dollar index. Let me keep going top down. Oil, I don't even know why I'm looking at oil. I don't like it. If I want to trade oil, I should just look at strangles. But I still don't like the trade. I think oil can break the floor. If we're going to see an improvement in energy prices in the U.S., we're probably trying to drive the prices lower. I don't know if I have really anything going on energy outside of XLE and Chevron. XLE, this trade is actually closing out, I think, on Monday. XLE positions, look at the whole portfolio here. XLE is, I just did a bunch of puts, up 420 bucks. This closed out by Monday, full expiration. I'm just going to let it expire for full credit, get 425 bucks. The other one is Chevron. Partial shares. I didn't really add a bunch to it, but I tested the levels. CVX currently up around $1,100, and this is just running CVX. You know, look, I think Chevron is more than just a oil company. I think that if we're going to have this like AI infrastructure, AI future, everything for utilities, energy, whatever, this is the big player in the space. So I took the trade basically down here when we're sitting at support. I did some bull call spreads. I did some ratio spreads. Those were for profit last year, and I kept the shares. And so I'm looking to see, will Chevron just run back up to highs? So if we get back up to like 180, then I'll probably take some profit. But if I want to see this go potentially higher, okay, fine. But I could definitely see a range trade going, right? Like a range trade here, and maybe that gives us a couple opportunities to participate. But this run so far has been pretty good. So that's it for energy plays. Oil, I'm not in oil. I think that we are still really indecisive. It's obviously going to be a bad look for inflation if oil prices go higher. It's a better look for inflation if oil prices go lower. But then you got to wonder, what is overall global demand? You know, is it dropping because U.S. is producing a ton? What about OPEC? But Saudi Arabia and U.S. both want to see lower oil prices because they have the ability to produce oil at a profit to as low as like $35 a barrel, maybe $30 a barrel. So I could see them both being okay with oil prices dropping lower, but then you start to see OPEC get a lot more vocal. All right, dollar yen so oversold. I don't know about that. Relative to what? I don't know how you can say oversold when this thing hasn't even started yet. You know, to me, dollar yen is still a massive range. I see this thing as far as the sell side, this is just getting started. I honestly, like, I probably won't touch this trade because I hate the Japanese yen and currency trading. But if I'm right on the Japanese yen getting stronger, this would be a pretty fantastic trade. If we come back and revisit those August lows, or we actually have a symmetry trade high, low, lower high, lower low. I'm just looking to line up a pattern here on the higher time frame and see if that's actually pushed to symmetry. That also comes back in line with the yearly moving average. So the hard part is if you're short dollar yen now, you're probably going to be going through a lot of chop before this thing officially like rolls over. So this is what I'm saying. Watch that summer stuff. There could be some shenanigans from like June, July, August on the Japanese yen, where if this starts to happen, we know how quickly it can happen. And who knows? But if I'm right on this directionally, there will be some opportunities to be, just honestly, some of the best trades I've had in the Japanese yen they've been sell stops, right? Like I sell, it fills, I sell again, it fills, I sell again, it fills, and it just bear flags its way all the way down to the profit target, and you get zero pullbacks, but you can just stop selling. This thing goes like a falling knife down to your profit target. So anyway, I'm definitely not that interested on a 45-minute chart there, Dougie. But bigger picture, I like this kind of 155 zone for resistance. Bigger slide down. I mean, I like lining up Forex trades where I'm looking at like 500 to 1,000 pips open space. So that's more for me. All right. COR. These are my non-US things. Let's see what SEHY is doing. Choppy. Let's go to the DAX. DAX pulling back a little bit. This big rip out of Eurozone, big rip out of China right away, starting to stall a little bit. FEZ, same thing. I'll probably still add some more premium in this one if it pulls back enough. FTSE still choppy and sideways. Argentina pulling back, trying to find a 200 moving average move here. China also fading a little bit off those September highs. Well, I should say September highs to fresh highs we had in March. EWZ is Brazil, fading off that 200 moving average. I want to see Brazil get above the 200 moving average, and I think we get a good position to go long. ILF is Latin America, same thing as Brazil. Want to see it get above this 200 moving average. MAG 7 all the way back down to the lows. Pretty close to it. So MAGs having the toughest go. Now, here's an interesting spot for MAGs. If we're getting back down to this swing from high to low, we did pull back just shy of the 30%. It is very possible that MAGs goes down to this low again and then bounces. So when you see a swing that goes back to a 30% retracement, a lot of times that 30% will just hit the same low again and then pull back. And it's either going to be a bear flag or perhaps it pulls back into the deeper retracement zone. So we might see the MAGs bounce off this level again. And, we might be in for some more kind of roller coaster rides in the equities markets. There's still monster stocks. Obviously, if you go Apple, it's still a $3 trillion company. Amazon, still a $2 trillion company. Broadcom, it's given back the $1 trillion mark, and this handle is not looking good. So Broadcom has room to fall. I'm totally good with this actually falling. This would be in your kind of chip space, semiconductor space, AI space. Let me see what fair market value is on Broadcom. AVGO. Let's go here. So price to earnings, that's pretty expensive on price to earnings. Let's see what it is compared to the peers. Fair value at 200. Well, then get cheaper. If I'm going to look at it enticing buy, I want to see this thing way, way, way cheaper. Compared to its peers, AMD is more expensive. ARM Holdings more expensive. NVIDIA, probably not awful. Qualcomm, a little bit cheaper, but AVGO working at bow. Well, unless we see a move back up above the 200 moving average, I would be willing to say, okay, that looks like a long position. But if it's going to fall, then let's talk about this low or this yearly moving average. Let's see what the percentages look like. And from this correction, that'd be about a 50% correction. So we pull back to this is a 5-period yearly moving average. Yeah, I'd love to see some, $140, $125 price targets with a fair market value at $200. Sure, I'd be interested in Broadcom at that. Google, sliding as well. Just have some dollar cost averages in. I still have some positions on Google 155. We're trading at 157. I might end up taking some shares of old Google, maybe. Not yet, but to be determined. 150 is my line. So if we get to 150 or lower, then I take some potential assignment. If we have, we have strong support back here in September. That's a 150 handle, 148 handle. But I've got some trades out to Google for the year. Meta coming back down to the 200 moving average. I'm interested in Meta with a much lower low. So high, low. I mean, maybe if it gives me a bullish pattern that I can start reestablishing longs. But if this is going to be high, low, lower, high, lower, low, lower, high, lower, low, then I'm just going to wait for a trend line. Remember, in 2022, this stock was down 76%. So don't for a second think that a little 20% pullback is enough on a pullback like this. This could be a 50, 60, 70% pullback. If we're going to see a 2022 all over again, then you've got growth and momentum in tech that could be really, really tough. So I'm not touching these stocks. I think there's way more volatility than people are ready for. And that is why I decided I'm trading indexes mostly. I'm riding this thing out. I've got a lot of hedges on. So I'm going to do my best to kind of defend my bottom line. It's like I don't want to take a lot of heat if this market's going to dump. I'm trying to put on hedges right now that are going to pay net profit. That's the plan. Microsoft, this one is profit. This one is profit. I'm still looking one for April. Let me check in this one right now. So April is not that far out. Currently, they're flat right now. 370 is the level that I need to watch. 370. We're trading at 382. It's only 20 days away, so that may actually work out okay for a ratio spread to give me some max profit, unless we are going to drop aggressively lower. So I'm going to change this to a 370 alert. So 370 would be my ratio spread assignment level. And I'll keep an eye on that one. Okay. Netflix. I've got a broke wing butterfly up above these highs for an April 17 expiration. That one's looking good for full profit. That should be in here. Netflix pulled in 74 cents. It's break even, but need a little bit more time. Only 20 days left. I also have a $5 profit trap. And I mean, Netflix has to get back to all-time highs for this trade to be a threat. But also there's a $5 profit trap on top of the 74 cents that I pulled in. So this one closed out for profit. That was full profit last week. That was a nice little winner. NVIDIA trading at 109. I don't know. Just expect a lot of chop on NVIDIA. I mean, if it's going to be resilient, it's still priced pretty well. It's relatively cheap for the fundamental valuations. So if we go NVIDIA, it's still fair value at like 130, 140 bucks, I believe. 126. We're trading at 109. So it's going to be choppy. But would it overshoot? I mean, if we come back to like $100, we come back to, $80, $90, okay. But I still think that this area, would maybe give us a building zone, watch some accumulation, and then NVIDIA at some point probably comes back to retest highs. I think my outlook on, going gangbusters bullish on NVIDIA is done. Now it becomes a structural trade for me, right? So we've broken this trend line. We've got lows to watch for. We've got previous highs to become support. We've got a range opportunity. So if we're down here at a pretty attractive level, that's, let's say $20, $30 below fair market value, I can see the price coming back to the halfway point. That's your halfway point. I can come back to resistance and support. So there's levels to buy. There's levels to take profit. There's profit opportunities. As we come into these lows, I'm probably going to sell more premium. So I've taken a lot of profit on NVIDIA with these ratio spreads. I still have some, when the price was really dropping and IV was high, I sold a bunch of puts at the 75 and 70 handle. So that's pretty much what my NVIDIA looks like right now. NVIDIA, I have some shares with some collar trades, and then I just sold a bunch of puts. 75 and 70 puts, 75s and 70s, 75s and 70s, lots of puts and combos. So so far NVIDIA is looking pretty good. The shares are not. I mean, I'm down in shares. I've got the collar trade running. My $100 put out to May is in profit, but I'm going to see if it really dumps. Because if that's the case, then I'll take some profit on the puts and lower my cost basis. Okay, Tesla, 263. So I have a covered call Tesla next Friday. I had one out last week. I could have let it go for a full repair at like $1,700. I rolled it out for a week to grab another $2.55. So my Tesla break even is around 229 or so, maybe even cheaper than that right now. So Tesla, let me go to my tracker here. Tesla is break even. Willing to own. Okay, watching. Let me just find it's in my spreadsheet here. There it is. Okay, break even is 227.08. 227.08. The lows were 217. So, if we stay above 247.50 by next week, I'll grab about $2,000 on 3 accounts. So I'll have about $6,000 in Tesla profits. If we stay above 247, if we don't, then I'll just continue to chip away at it with covered calls. But we'll see how this one plays out. There's a gap fill there. I understand it. It may not be above my strike, but so far it's kind of hanging in there. We'll see what the resiliency is for Tesla. What up, dude? And yeah, so that's next week, 247.50. Berkshire Hathaway. You know what? Let me price something in on Berkshire Hathaway. I hate to be the bear. Let me see if I can go Berkshire Hathaway B. What the heck? Berkshire. There it is. BRK. We're trading at a 45 IV. So this one has a similar bar count to the S&P. The S&P has already made that move. We're now 354 bars away, and we have a decent stretched 12.5% away from the 200 moving average. That stretch was around 15%. This stretch was around 15%. This stretch was probably about the same, around 15, 16%. This stretch is around 18%. Okay. So what I'm going to look for is, could I set up a trade on Berkshire where I can pull in credit? I can allow this to go up a little bit higher, but as long as we are, getting some sell levels in around this 20% spacing. So as long as I'm selling something around like the 555 or 560 level, let me see if I can price this thing out. So if I go trade on Berkshire Hathaway, we've got earnings coming on May 2nd. Okay. So I either go out 28 days and I get little to no premium for this one. Let's see what this one looks like. So this would be if I did a call. Ugh. This one's not terrible, but it's not great either. No. I was looking at a similar trade to what I did in gold. $5 profit trap, probability of profits pretty high. But that trade for 37 cents is kind of bogus. So I'm probably not going to take that trade. If I do a bear call spread, $1.24 on a bear call spread, that's not the worst case scenario. Could I do that's 83 cents, 10 wide. Man, that's just a terrible reward to risk profile. All right, it's just not offering enough premium. I don't love it. Now, I could go through earnings and kind of take a stand and say, I think it's going to, fall through May. It's like, maybe it does. But if I went out to like the May 16th one, which is post earnings, the risk that I run is if there's another pop to the upside, it could threaten my position. So let me just see how it prices out. 49 days is kind of a sweet spot expiration. So let me go May 16th, price out a similar trade. So if I went let's say 550, 555, 560, like that trade I can get behind. But now my probability of profit's only 84%. I don't love that trade. Move this down a little bit to increase the probability of profit. $1.52, 86% chance of profit. But that's a lot of buy power, and there's no defined risk on the trade. So probably not the smartest trade, which means I'm probably not going to take it. So yeah, I think I'll hold off. I look, if I put in a trade hypothetically, I don't think that we're going to get to 550 or 560 without having some type of pullback. So that's what I'm trying to line up. I just don't have a good I don't have a good setup to have a fair reward to risk on the trade. For me to risk unlimited amounts of upside because I don't have anything braced on the calls, then cool. I grabbed the dollar, but I have like thousands and thousands of dollars of risk if I'm wrong. So I don't want to take that trade. Especially if we have some type of seasonality where this April 2nd Liberation Day tariff conversation is in fact the buy the rumor sell the news and the market lifts up, then Berkshire can go to new highs again and I'm just going to be in the way. So if we have any seasonality to these markets, I want to be careful of calling the tops in some of these trades. I still think there's a high bar count. Same thing on gold. I still think we're going to pull back, but my job is not to call that. So this trade is done for profit. That was ratio spread for last week. That's done. But anyway, that's it. Bonds, anything here? Bonds up a little bit. TLT's up to 90. Still working part of my diagonal spread. Fed funds rate, nothing really changed. Nothing shifted. 10-year is falling a little bit. That's totally fine. If the market's going to fall, I said this for the last couple of weeks. If the 10-year is going to get lower, I think the market's going to have to go with it. The only way we're going to see the 10-year really drop substantially, and what's stupid is this is the first time in history that the yields have done the exact opposite of the Fed, because the Fed cut rates right in here and the market said, haha, we're going to do the exact opposite. And we ripped up about 115 basis points. And then the market falls and so does the 10-year. So if the market falls again, well, that's how the 10-year falls. This is possibly a little bit more encouraging for borrowers. The problem is you're probably going to see like a 15 to 20% correction on the market from all-time highs. So that's a pretty interesting trade-off. Would you rather see mortgages fall down by 50 basis points or 100 basis points and also see the potential threat of recession? Or would you rather see the 10-year stay sticky and slow growth and choke it out where nothing can really grow? I don't know. So I did have this conversation yesterday, and I think this is something important to look back on. But if you go to 1998, this was kind of a similar political environment and similar kind of economic cycle where we go into, this is 2022. I've obviously go back a lot further on the weekly chart. I'm running an entire class on this stuff this weekend. So go back to 1998. Doesn't really look like much because you're like, well, the market crashed in 2000. Sure. But in 1998, I thought this was a really interesting comparison to where we're at right now. Intra-year, we had a high in July, and by October, this market was down 22%. But by the end of the year, it was actually back up to the highs again. That is a crazy, crazy move. That's the type of garbage I could see this market doing in 2025. We have this fall, pullback, fall. The market has this nasty, nasty cleanse. And then we have just an absolute ripper of a market for the next maybe year and a half to 2 years. So if there's pain coming, I'm telling you, be prepared for like a 20+% correction. If it exceeds that, I'd say 20 to 30%. 30% is going to feel like absolute garbage unless you're hedged, which I am. But I would be looking to sell a ton of premium at the 20 to 25 to 30% correction levels. And I would not look back. I would be willing to put on most of my cash and deploy, because if we do have a recovery, even back to the highs again, that is, a 22% correction. A 22% correction right here. If it gets back to those same highs, that correction goes, 28% to the upside, almost 29%. So anyway, if something like that occurs, that is why I'm hedged. If we find the bottom at whatever level that might be, 20, 25, 30%, and we get back to those highs, that to me is a great time to be looking to get long. And how to do that? Selling a lot out of the money puts, collecting a bunch of premium, and then of course, stacking up some directional trades, kind of week to week, month to month, as this market might find that it needs to cleanse itself first. And then there's swift policy adjustments and reform. It could be on the fiscal and monetary policy side. But that's probably my biggest macro thought for 2025 is if we have a nasty slide, it's probably going to come with a bottom at some point, but it's going to be really, really disruptive. But as we've seen in years past, it's like, man, if you buy the dip in this market, it somehow just makes you a ton of money. So a dip, a correction, I could see it being here. Somewhere in here. So if there's an overshoot, I still look for a bull pattern. I can then position out that bull pattern, but I'm braced and hedged for this. If we get it, I probably have like, 5 to 10x returns in a lot of my hedges, which will help offset hopefully a lot of the potential drawdowns exposure, because I've spent so much time these last couple of weeks just fighting back and limiting some of the exposure. I've added about $470,000 in buying power back in the last couple of weeks. So I did clean up a lot of positions, took a lot of winners, and I still have some exposure, obviously, but it's a lot. I feel like I'm a lot better positioned now than what I was like going into that first fall. So we shall see. And at the same time, let me keep this really simple before I bounce out of here today. So if we go back and just think about the bottom in 2020, I'll just go from here. Okay. So from this COVID low, let's say we have a wave structure. Okay. Just basic Elliott wave stuff. If we go wave 1, 2, 3, 4, 5. Okay. And then after wave 5, we typically see an ABC correction that gets us back to this level or this level before the market resumes its trend. Okay. Now I see this from the COVID low 1, 2, 3. So we are looking at a wave 4 right now, and wave 4s can be really tricky because wave 4s can either be a correction wave where it pulls back and tests. This would be your swing high from this wave 1. So if we have this being resistance becoming support, then that would be your wave 4 correction, and then a wave 5 is still to be determined, right? But also I see a lot of wave 4s, and this happens in currencies quite a bit. When you have a big swing in your wave 4, everyone's looking to short wave 4 when you really shouldn't. Wave 4 is just a correction, and then wave 5 typically just kind of comes out and finishes. Wave 5 is usually a bit slower than waves 3. Waves 1 and 3 are usually fast. Wave 5 is kind of this like slow grind, but still making higher highs and higher lows. But wave 4 is mostly a pause type correction wave. And if we're dealing with that, that's going to be a bunch of noise we're trying to navigate right now until this wave 5 can kind of pick up steam. But I think, right now, given the fact that we've had this overextended move, plus the correction, plus the rotation, plus all the potential uncertainties, yeah, maybe this becomes more of a corrective wave, and then we see this level. So just eye on the prize, bigger picture talking, resistance becoming support, anything around like 5,000, anything around 4,800. If we hit those levels, I'm extremely interested in positioning longer term for a revisit to the highs and possibly all-time highs. So if that would be a 25% run to even 30 to 30, I mean whatever. If it takes a year or two to get that, you can analyze those gains plus leverage it with options and make a ton of money. But you got to be prepared for that downturn, which if we get it, I want to be prepared for it. If we don't get it, then I'll be pleasantly surprised that the market's not as bad. But if we get it, I certainly don't want to be feeling the pain like most investors do. So that's why I'm hedged. That's why I'm protecting the portfolio, trading the bottom line, and see if I can actually come out net positive on a drawdown, as well as have the cash to position myself for a big potential move back up. So, all right, that's that. XSP crossing. Okay, fine. Watching that for April 4th, which is next Friday. We'll see what happens. SPY's at 558, XSP 560, futures. What a nasty Friday, man. What a nasty Friday. Here is the level I'm watching for today. So I need to see if SPX can get back above this level today. Hopefully it can. That fib is slightly off, so I'm going to go just down to that low today. And this second level, this is the support level from FOMC week. So if the market comes here and then finishes, the day kind of pulling back, that's fine. If it's above this level, greater than this level, I still make money on my SPX trades this morning. I didn't get filled on my butterfly. I just have a bear call spread up here. That's fine, but I want to see if it stays above this blue line. Okay. All right. Doug is asking, what's hedging? Well, basically, if I was long a portfolio, so let's say that I'm buying the SPY. Well, if I'm long the SPY, that's where I am only going to make money if the price goes up. So what I do is I have positions on that if the price were to drop, I can make money on this drop, which will help me effectively lower my cost basis. That allows me to stay in the market. So if the market goes up and down, I can basically be flat with my P&L. And that way, if the market goes back up again, I can build that into higher highs, and it doesn't require the market to make new directional highs. So this year's been a pretty satisfactory hedge so far. I was hedged pretty aggressively in this first part of the year. I went out to Q1. So in December and January, I put on a bunch of 331 expirations. And what happened? Well, by, March 10th or 11th, we had a 10+% correction. So all those played out really nicely. I had anywhere between 150 to 300+% gains on some of those hedges, and that helped me eliminate some of the trouble that I was in. And then as the market pulled back, I had a lot of winning trades, and so I closed out a bunch of those, closed out my hedges, and that helped me. So even this little push right here, this little tiny push, I was at all-time highs with my portfolio for the year, and I was up about 8% or so for the year. Right when we started out, I was sitting about 8% positive. We had this drawdown, and then we had this little push right here. I was back up to 9% in my portfolio. So that's good. Like I basically have shifted my cost basis, my entire portfolio down to a decent correction zone. Now I still want to be braced for more downside just in case, but if the market finds a way to go higher, then this 9%, hopefully getting back to highs again, I'd be up 12, 13, 14%, if not more. So hedging is just ways to protect your portfolio. Okay. All right. Anyway. All right. I'll let you go for today. Happy Friday. Let's see how the things kind of settle in for the day. I'm watching obviously closely on SPX to see what happens by close. And then Monday's end of quarter. There is a key level on SPX. JP Morgan does about a 20 delta put, 20 delta call combo every quarter. And that 20 delta is sitting around 55.65. So I do see the market capable of defending that zone and still kind of bouncing off of that by Q1, which is Monday's close. So I could see us pulling back a little bit, but then we come into first week of April. We have non-farm payroll. We've got Trump's talks on the 2nd for tariffs. It's going to be a volatile week. I don't know what direction it's going to go. I will try to trade accordingly. So brace for more downside, yes, but trying to be somewhat optimistic that this market can not just roll over on itself and the bulls just go in hibernation. So just be prepared. It could be a very ugly first half of the year. Yeah, if we are going lower, I could see this market for the first half of the year being 15 to 20% down. It's going to scare every investor, and then everyone's going to miss out when this market starts ripping back up to highs again in the next 6 to 12 months after that. So just saying, have the mindset of cash at the ready, play defensively right now, and look for the big opportunity. The bigger picture opportunity is I see this as if we come back to this 2021, 2022 high, that is a beautiful spot to be looking to get long. Now, if there's, what would make it more troubling? I don't know. Maybe we go into like a nasty recession and all of a sudden this is not just a 20% correction, but it's a dead cat bounce. And then it's another slide lower. And we're talking about, like awful, like awful lows. But if this is resistance to offer support, if we have a bear trap here and then a bull pattern, that bull pattern could offer up some really good confirmation. But I'm genuinely concerned if you connect these lows and we break this structure. If we don't have a bullish pattern poking back up in here, that's bad. Like that's real bad. So who knows? But we're talking great financial crisis. If we have a 48% correction to find this outer trend line, the whole world's going into a recession. The US doesn't just drop 48% and like, oh, Germany's fine and China's fine and everyone else is fine. Non-US is fine. No, everyone's going to be down. So we'll see. Right now, the good thing is you have some optimism out of Europe. You got some optimism out of China. Whether it's optimism or you're just seeing fiscal policy spending, that's a big difference. But I don't think the US can necessarily afford to go into recession. I think the US still has a Fed put, Trump put backstop. There's tools to work, right? Great financial crisis. I'm pretty sure if the lesson learned is how not to let that happen again, that's why the Fed is so important to this kind of emergency backstop stuff, because they can always dial in, they can dial up or dial down the monetary policy, whether or not it's the right thing. Everyone complains it's backwards, it's reactionary, but the fact of the matter is, every major dip and pullback we've had, there's been some type of activity from either government or Fed to help kind of right the ship. And whether you call that manipulation or not, it doesn't matter. If I can make money doing it, then I'll follow the Fed or I'll follow the government. I'll follow the big flows, but we got to watch for key levels. So, all right. Talking through it. All right. Have a good weekend. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.